Theo Trade presentation. I'll explain what Ultimate Trades here is momentarily, but I mean, Ultimate Trades really, it's 2021's its high probability income generator. Again, as I said a moment ago, my name is Don Kaufman. You're watching a Theo Trade presentation. Here's a risk disclosure. We're not a financial advisor nor a broker dealer. I spent about 15 years of my career in the brokerage world. So I'll give you a little background on that, but I'm out of the contest of the brokerage world, down to business. This is why you're here. So today, obviously, we're going to discover a little bit about Ultimate Trades and why they are absolutely ideal for the current market environment, so you can generate potential monthly income. We're also going to talk a little bit in depth here right up front about a trading symbol that has been widely used by many professionals. It doesn't seem to really infiltrate into the retail trading world. But this particular symbol is used definitively for Ultimate Trades. We're also going to talk a little bit about Edge and where you can find Edge as a retail trader and reap the benefits of high probability trades while learning how to actually mitigate risk on the back end. You're going to hear, the term hedge. Listen, if you're unfamiliar with the terminology hedge, it's risk reduction, risk reduction, risk reduction. They are not the bushes outside the front of your house, but it is most definitively risk reduction. And we're going to find what products make some of the most viable candidates for these Ultimate Trades. Before I get too far, there is an indicator that I will use almost incessantly throughout not only the course of today's presentation, but anything you've watched in terms of video. I use an indicator called auto expected move. I'm a big advocate, okay, that if I'm going to use that indicator to provide you that indicator, stick with me right until the end of today's webcast. And our free gift to you, we will actually gift you the auto expected move indicator. It's a $497 value. Again, you have to stay with me literally right to the end of the webcast. I'll explain what the auto expected move is here in just a moment. In fact, here, I'll pop it up on this screen. This happens to be in reference to the IWM. And you know what? I think the better way to do this, I'm going to explain it. I just, again, screenshots don't do it for me. And I have PowerPoints, but screenshots, here, I'm going to pull up the XLF. Everybody know what the XLF is? All right, again, you're joining us. Let's get into this. So the XLF, let's come in here to auto expected moves. And these little, these three lines on the screen. In fact, I'm going to pull up a sneaky little drawing tool. Make sure my drawing tool is active. Good, ready to go. Right here, these three lines. This is where the week started. This is the upper edge of the expected move, lower edge of the expected move. These are the financials. Look at this. They've actually breached the expected move. So what are these lines representing? They're representing it's what options depicted risk to be the week ahead. So the option market actually depicts risk, okay, to the forward future. If you have an option a week from now, it literally says, this is what we're likely to move a week from now. And they are incredibly insightful to use for all kinds of things, premium buying, selling. Really what it breaks down to is efficiency or inefficiency in the marketplace. And again, that is something we will gift to you. You do have to stick with me though, right, of course, until the end of the webcast. By the way, somebody's asking how to change the colors on there. You can change all the colors on the expected move indicator. That is completely up to you. It's easy. A couple of housekeeping items. Listen, this is a skill set, and I am going to provide an incredible amount of material today. I'm going to tell you right now, I'm probably going to run longer than an hour. I do hope that's okay. We respect everybody's time, but at the exact same time, markets are open. There's a lot going on today, and I've actually added quite a bit to this presentation. So by all means, sit back, relax, and enjoy. Listen, shut the door, turn off Skype chat, whatever else might be distracting you. As I said a moment ago, this is a skill set. And I'm going to go through a huge amount of course material. Definitely kick out the kids, put the phone on silent mode. In fact, I'm doing that myself over here. There's nothing like being on camera and realizing, yeah, I should probably do that. Listen, you took the time to be here. This is important. So focus on being here. Here's a little bit about me. So again, for a quick introduction, as I said, my name is Don Kaufman. You may or may not be familiar with a little bit of background. Some of you guys are brand new and you have no idea what a Theo Trade or a Don Kaufman is. That's fine. Listen, I like to put in the heading over here. I watched order flow for 15 years. You're like, what does that even mean? I mean, that is in large part though why I am here. So my background is I grew up around traders, and people always say, "Yeah, traders come from all walks of life." Well, I actually grew up around traders, market makers specifically. I had an uncle that was a market maker, dating all the way back to the 70s, literally when I was born. In the 70s, my uncle was a market maker. He built a trading firm. If you are anywhere in the Midwest, whether it's like Kansas City, actually had some trading. Chicago, the firm was called O'Connor and Associates. They actually had over 500 seats on exchanges around the world. At his departure, they sold the firm to the Swiss Bank in 1992. That firm is still the driving force behind UBS. So that was like, I guess, my indoctrination to trading. I started trading in the late 90s, and a short time after I was trading in Chicago, I went to Chicago literally 3 weeks out of college. A short time after that, I I was invited to a startup brokerage firm, and I started working for him. Literally in 2000, 2001 is when 2001 when I officially accepted the position. I was doing some contract work for him before that. The firm was called Thinkorswim. And most people like at the time, what's a Thinkorswim? And people still like it. That's the dumbest name ever. So I actually built the education division of Thinkorswim. And I went on to help take Thinkorswim public in 2007, and I was on the executive management team in '07. In 2009, TD Ameritrade purchased us, and I went on to actually run education for TD Ameritrade. At the time, we had about 7 million clients, and one of the big reasons, again, that kind of brought me here, and the reason I give you a little background, is that to build the education division of both Thinkorswim and TD Ameritrade, we looked at this a vastly different way. When we were at the brokerage firm, what we actually did to build education, like, come on, we knew trades. We were a bunch of market makers, right? We knew how to trade. But what we didn't know is what worked for retail trade. Like people all the time, they present themselves, I was a former market maker. Good, you want fries with that? So are half the people in downtown Chicago that are now driving a cab. Like that doesn't make a difference, right? What we did at Thinkorswim and TD Ameritrade, and what was revolutionary at the time is we actually studied the retail trades. We looked at everything. I mean, everything. We would actually batch these retail trades together, and we could tell you, like, do people make money from a covered call? Do they make money from an iron condor? Like, if you just went out there and bought and sold stock, what's your probability of making money versus losing money? People, we looked at everything. We were able to actually derive, okay, not only what worked, but what worked effectively. More importantly, we learned definitively what did not work for retail traders. And that's actually a huge amount of where the education here at TheoTrade comes from, specifically today too. What you're going to learn is what I say, it's from watching billions and others' mistakes, and the knowledge of what works best, not for market makers, but for retail traders. And it's something that's really insightful. And by the way, there's only a handful of people in the world that have ever had access to that degree of order flow. People love that when I say that. I'm like, I looked at your account. Okay, that's just wrong, isn't it? Okay. Anyway, with that, if you ever need to get a hold of me after today, I also like to throw this up on the screen. I'm just support at theotrade.com. So feel free, put Don Kaufman in the heading. All right. By the way, that's me. I still do a lot of TV appearances from time to time. That's actually the last time I was in Chicago. This is the longest stretch that I've gone of not being in Chicago in 20 years. So last time I was in Chicago was August of 2019. Obviously not traveling around a whole lot. This is actually one of the times I was on CNBC, myself pitted against, of course, none other than Kevin O'Leary. Down to business. What are Ultima trades? First and foremost, when people look at this and they say Ultima, they're like, ultimate? No, it's actually Ultima. And if you're familiar with options. Oh, I said the O word. I'm going to say that a couple of times today. Is it okay? Is it okay if I say options? I'm just asking right now. I'm saying options or forever hold your peace kind of thing. Anyway, whenever I mention options, some people are like, that's it, I'm out of the contest. Just calm down. Like, they're okay. Listen, even if you're not going to trade options, you have to understand them to be in the markets today. Okay. So one of the things, Ultima trades, Ultima is not ultimate. Okay. What Ultima basically means is, first of all, higher volatility. Higher volatility has resulted in significantly more options premium. You're like, okay, all right. That makes options priced higher. So when I mention like higher volatility, let's actually define a little bit of that. All right. So markets are moving today. And again, you know what? I love doing these presentations. Seriously, love doing the presentations when the market's open. I just, we used to do presentations like at nighttime. It's not dynamic. I like to trade. Like, what else is the point of, you come to some seminar and somebody keeps you in PowerPoints the entire time? Screw that. Just don't like it. Okay. Look, you want to see everything? There it is. There's the P&L on the day. That's this particular account. Okay. You want to see another account? Go for it. Right. It's an open book. Here, the P&L there is $5,000. It doesn't make a difference. Right. And in today's better than yesterday, I guess, we show everything. I specifically, like, this is no holds barred. We'll aggregate every single position inside of my account. I'll show you the entire history of the last quarter of this Theo Theta portfolio, everything. So as I was saying a moment ago, higher volatility. So how do I constitute, like, what constitutes higher volatility? A lot of people think of the VIX. Go back over 3 years, look at the VIX. Okay, it's fine to do so. Look at the VIX. And you can see, obviously, since the onset of COVID, it's been significantly higher. But right here, in just the last few weeks, volatility, it dipped, to still my heart. Okay, it did. It dipped a little bit. Nevertheless, we're still in a much higher volatility climate. In fact, if you look at the last 2 days, volatility is what we term bid, which is volatility is on the rise right now once again. So volatility is all well and good, but that's not what this is just about. Options implied volatility skew is also at historically high levels. So this is something I was mentioning a moment ago. You want to learn a symbol that people haven't necessarily seen. It's called skew. Now, skew looks like a bunch of dots on the screen. You have to come in here and actually change it over to a line chart. And I want you to look at skew. We'll go back. Let's go 5 years. Okay. If you take a look at skew where we are right now, it is incredibly high and has actually remained incredibly high. And again, this is 5 years. Maybe it's more effective to look at like 3 years. Okay. Look how high skew has been for such a significant period of time. In no other point, okay, in no other point since skew has been recorded has it been, okay, holding above 135 for this period of time. Skew is incredible right now. And what skew basically measures, it measures options premium, okay, from puts to calls. It's the out of the money puts over the premium over the out of the money calls. And I don't want to go too deep into that, but when people ask what Ultima is, well, Ultima, it's technically the volatility of the volatility of the volatility. And what it has to do with, and what Ultima really breaks down to, is there's volatility in the marketplace, right? So let's get that out of the way, right? There's volatility in the marketplace, and then there's the volatility of the volatility. And that's actually measuring how much risk is in volatility itself. Then there's the volatility, the volatility, the volatility, right? And that's actually what we call Ultima. And that is what is, it's tweaked right now. The skew itself is tweaked, and it's really, really beneficial. And very, very few people are catching on to this and know how to go after it. So when I show you these distribution curves, this is not to kind of to freak you out, but basically what's going on is a whole lot right now of, well, to kind of explain it, a whole lot of this, right? The curve is very, very beneficial for us selling options premium in many ways, shapes, or forms. And that's what Ultima Trades is to a larger degree. By the way, Ultima Trades is not just about like selling options premium. It's about the right options premium to sell. It's about knowing about skew, and for those of you that are real geeks, kurtosis. Okay, so how can we use skew to our advantage? So skew provides edge in the sale of out of the money options. Okay, so skew provides edge in the sale of out of the money options. And again, I said the O word, I said options, right? So many traders are currently buying options and have, in effect, they've kind of tweaked, all right, the skew to some larger degree. And I'm actually going to show you something interesting here in just a moment. But when I say this, and how many people here have honestly have started trading options for the first time in like the last year? Started trading options for the first time in the last year. Just, me. Okay. Many people are probably familiar with this, but the volume in the options marketplace has exploded literally inside of the last year. And the reason I'm getting into this is this explosion in retail options trading, I mean, how do you think stuff like GameStop happened? Okay. Some people have, have actually traded options for a few years, but my guess is even if you've traded for a few years, you've dialed up the amount of options that you've traded. This is actually a couple weeks old, and I apologize for not updating this particular slide, but this is actually very close to the contract size last night. So look, 35 million contracts were traded, a couple weeks ago. The April of 2020 average was 26 million, but look at the 2021 average. It's almost 42 million. Okay, 42 million contracts are being done on an average day right now in 2021. 42 million option contracts are trading. Okay, it's absolutely incredible. But most people that get involved in options, okay, are actually on the buy side. They've been massive on the buy side, which is exactly why I'm going to talk to you a little bit about learning to sell options. I actually grew up as an option premium seller. Okay. And premium selling it's what I've done for years. And there's been times where it's been good and times where it's been, decent. But since the skew is so high, this has been one of the greatest premium selling opportunities that we've seen in literally since a decade ago. I mean, you have to go all the way back to 2011 to see action like this, even in a lower volatility climate that we're in right now. I mean, volatility subsided the last couple of weeks. Today, we're going to talk a little bit about learning to sell options. So many of you, you've kind of heard through the grapevine that selling options is a way to make money. How many people have heard that? Okay. Everybody comes into this business and starts the same way. They start kind of as an option premium buyer. Like you go out there and you're like, yeah, I bought me some calls and I hope the stock goes up, and they're like duck and cover kind of thing. After buying the calls, you're like hiding under the covers. Is it working yet? Is it working yet? But sooner or later, if you've been in this business and you survive in this business, what does everybody come to? What does everybody come to? All right. They come to the idea that, they start hearing through the grapevine that selling options is really the way to sustain yourself. But if you've experimented with selling options, you're going to know full well that there is definitively risk involved. And we're going to talk about that. So today's session, it's designed to separate what I kind of call, fact from fiction, real risks from not so real risks. And we're not going to leave you exposed to huge amounts of risk here today, but we're going to get down to the definitive action of selling options premium. And I'm going to tell you right now, don't panic. You can do this. I say that in simple respect to the fact that you may know nothing about options. There's people that are coming out here for the very first time today. And listen, we have got a decent sized group on today. So if you know nothing about options, that is okay for today's session. Listen. If you know nothing about options, I want you to grasp big, broad strokes of logic. Okay, I want you to think about, some of the big concepts that we're throwing out you, why we're selling options, in terms of, the structure of the trades. Those of you, though, that are a little bit more experienced, those of you that have some experience and have actually executed some option trades, I want you to pay attention to the finite details. We're going to go to all extremes today. And, I'm not going to keep this very basic. I'm also going to not make it too extreme. I think everybody can pick something up on both sides of the spectrum. One of the first things I also want to give you is a little bit of a news flash here that selling premium can be done in incredibly small accounts, under $5,000 in retirement accounts. Okay, I'm even going to say this, and we'll look at this. So, do not, throughout the course of today's session, get hung up on margin. I don't want to hear it because I'm going to tell you right now, it doesn't matter anymore. There are new products, effective products. Okay, you could sell options premium in a retirement account. Technically, you could even sell naked calls, naked puts if you wanted to in any size account now, with fairly minimal risk. And that's something that even the experienced people are like, how do you do that? And we'll definitely gear you towards that. For starters, let's look, as I said a moment ago, to grasp big concepts. Probability, risk. Let's dive into this. So there are a lot of terms and definitions thrown around when you're talking about selling options premium. This is what I call the many facets of selling option premium. Selling premium can be referred to in a lot of different ways. And when I say selling premium, what am I talking about? I'm talking about selling options. Okay. So selling options, I can sell premium. Sometimes it's called selling premium. Sometimes they even call it juice, right? I'm going to squeeze the juice. What's squeezing the juice? Selling options premium. You can call it credit spreads. You can call it short call spreads, short put spreads, delta neutral trading. Delta neutral trading is an infatuation with selling premium. Doesn't always have to be selling premium, but some people do call it delta neutral trading. Selling naked. Listen, selling premium can be used to create both bullish and or bearish trades, but generally are considered market neutral spreads. One of the things you're not going to see a huge amount of charts here, okay, today, because it is not going to, it's not going to affect us all that much for selling premium. Okay, probability and profitability. Your trading is based on probability. Your trading is based on probability, whether you like it or not. You and I can create trades all day long with a 90% probability of success, and you can still lose money. I like to do these presentations and give you reality. I know everybody wants to, sugarcoat everything. The world is a wonderful place, and we're all going to hold hands, and we're going to make some money. You can, but you have to know how to not lose it. It's actually a critical aspect of this. And the one aspect that I really just want to just drive home to you right now, probability alone does not make you profitable. Probability alone does not make you profitable. Let me key into something that just came in terms of one of the questions. Somebody said, basically what it breaks down to, how often are you right in that Theo Theta portfolio? I'm going to show you the Theo Theta portfolio, but I want you to understand something. Okay, that question that came in there, how often am I right? I don't know, 90% of the time. Like people, they blast out these webcasts and all these things, and they go, follow me, I'm right 95% of the time. And I'll counter that. Listen, I've been trading for the better part of this is my 23rd year in the business. If you want to throw probabilities out there, sure. Like I can tell you right now, lately I've been right like 95% of the time. You know what that's worth? You want fries with that? It's worth nothing. Okay, it's worth absolutely nothing because anybody can be right 95% of the time. And you say, well, how's that possible? I don't know. Pick a stock, any stock will do. Okay, you can go in there and pick a stock, and you can just do 90% probability trades all day long. And the one thing is, just because you're right, and again, I'll bring up Apple, and you can see I've got a position in Apple. I'll bring up Apple, and I'll come all the way out here, like 59 days out. Like there's calculations on this trading application. Look, there's calculations in here called probability out of the money. Okay. If I just go right to here and I go, oh, but still my heart, look, I'm right 90% of the time. Yeah. So I could actually go out there and I could trade that option and I could be right 90% of the time. Is that going to make me money? Absolutely, unequivocally not. Probability alone does not make you profitable. So don't buy into the hype that, look at me, follow my trades. I'm right 95% of the time. It's a joke. Okay. And you need to know that now if you're gonna come to this, and anything you ever hear that somebody promotes like probability, okay, probability doesn't make you profitable. We need to make you profitable. That's what matters. Markets are always a trade-off. Markets are always a series of trade-offs. Higher probability equates to higher risk because you can be right 90% of the time and still lose money. So where can you find edge? I mean, that is what people are here for, right? Good, because that's exactly what we're about to show you. So we're going to show you some really important aspects of this. All right, discovering probability and premium selling tactics. So here is the first of several examples I'm going to give you. And this is like a $50 stock. And now notice I immediately jump back to a live trading application because after I'm done showing you my mocked up trade, like I like to show you real stuff. Are there even any $50 stocks left? Oh, there's Twitter. Okay, it's almost a $50 stock. There's eBay. It's almost a $50 stock. I remember when there used to be $50 stocks, people. Now they're all like, a $5,000 stock. Anyway, let's start with the $50 stock. And I'm going to give you just a brief example here. And again, I apologize for getting close to the camera, but I have like a little right on board that's like right here. I was telling you guys a little earlier. So when I trade and I actually do a presentation, I have 1, 2, 3, 4, 5, 6 monitors. Why? Because it amuses me. It really does. But to be able to draw, to be able to communicate with you guys, to be able to actually watch, I have another screen over here to my far left that actually has a trading screen up to be able to watch everything going on. I think I like it. Here's a $50 stock. By the way, in every single example, I like to use stocks and I like to call them stock. And stock is trading at 50. Now, do I own the stock? No. Do I want to own the stock? No. Do I ever want to own this stock? No, not really. All I'm going to do in this particular case is I'm going to trade stock and I'm going to trade the options on stock. Okay. I'm going to come out here and I'm going to look at what's called a 60 call. Okay. Stop right there. 60 call. Now, some people have never traded options before a day in their life. So we're going to look at the 60 call, and I'm actually going to bring that down here and I'm going to put it's a 60 call, and it is good, all right, for let's say 1 month of time. And that 60 call is going to be trading for something. It's going to be trading for, in this case, let's put it at $1. So the 60 call is trading for exactly, okay, $1. We okay? 60 calls trading for $1. Time out. For those of you that are absolutely unequivocally brand new to options, the stock is trading at 50. Yes, this is the stock. See, when we look at a stock, we think of a stock as in a distribution curve, because what can the stock do? Well, the highest probability of where the stock is, well, where the stock would be right now, right? That's the highest probability of where the stock is going to go, is where it is. So where could the stock go? Well, the stock could go up to here. The stock could go down to here. The stock could go down to here. The stock could go all the way up to 60, okay? But what's a 60 call give you the right to do? For those of you that are brand new, listen. For those of you that are experienced, well, hang on there for a minute. Just bear with me for a couple of moments, because this sounds like a very simplistic example, but this simplistic example is going to have, okay, underlying concepts that are going to start to really resonate with you here momentarily. You ready? A 60 call. For those of you that are brand new here, when you trade options, a 60 call is actually called the strike price. The 60 call. What's a call option? A call option gives the right, not the obligation, but the right to buy the stock at 60. Do I want to buy the stock at 60? No. Then why am I buying a 60 call? Because I have the right to buy the stock at 60. And if I buy a 60 call and the stock goes to 100, I'm gold, Jerry, gold. Like, think about that for a second. So if you buy a 60 call and the stock were to run all the way up here to 100, you'd be like, I am the smartest man alive, because you have the right to buy the stock at 60, and everybody else in the world would have to pay 100 for it. Do you have to exercise the option? You have to do this, that, the other? No. If you have a 60 call, you have the right to buy the stock at 60. You do not have to buy the stock at 60, because the 60 call with the stock trading at 100 would be trading for a minimum of $40. Okay, it'd be trading for a minimum of $40. So you'd make 40 bucks in that trade, minus, of course, the dollar you paid. But let me ask you something. What do you think the probability of the 50 stock doubling and going to 100 is? You're like, it's zero. It's not zero. Anything can happen, especially if you're on the wrong side of the position. But I'm going to tell you right now, that would have very, very low probability of going to 100, especially in the next month. So think about this for a second. What are we really actually going to consider doing here? Well, the irony is I'm not going to buy the 60 call. I'm not going to buy the 60 call. I'm going to go out and I'm going to do what? I'm actually going to sell it. So the 60 call, I'm going to go out there and I'm going to stuff it in somebody's face. Okay, I'm going to sell the 60 call. Now, for those of you that are brand new, let's assume, okay, even if you're experienced, if you know what selling options happens to be, I'm going to turn up my fan here. It's hot already in Scottsdale. Okay, it's hot here. So my out of the camera angle when I was turning the fan up over there. You go out and sell an option. And for the most part, when people think of the idea of selling options, they get nervous as soon as he said, did he say naked? I said naked. I want to sell it. I want to sell it naked. And immediately somebody goes, I don't have the margin for that. I told you, don't worry about the margin. Okay. Don't you worry about margin. I got you covered. I just want you to think about it conceptually. I want you to go out and I want you to sell a 60 call and I want you to sell it naked. And you go, okay, so conceptually, I'm going to sell a 60 call naked. So a 60 call, what does it give me the right to do? Whoa. We're not buying it, we're selling it. So if you buy a 60 call, you have the right to buy the stock at 60. But if you sell the 60 call, somebody has the right to take stock from you at 60. You go, Don, I don't own any stock. You go, exactly. So what are you doing? The whole position is I'm just selling a call. So the cool thing about options, You can buy options or you can sell options. You can open trades by buying. You can open trades by selling. You go, how do I sell something I never even owned? You're selling yourself into an obligation. Okay, you're selling yourself into an obligation. It's like getting married, but worse. Anyway, so you sell yourself into this obligation. What's my obligation? To give somebody stock at 60. So what can happen to you in here? So you sell the 60 call. What happens? Well, you could collect as much as $1. Can you make more than $1? No. If you sell the 60 call and you get $1 up front, nobody comes back later and goes, that was a wonderful 60 call you sold me. Okay. Nobody does that. Like, it's like selling a car. You sell a car, okay? Nobody's going to be like, oh my gosh, that car was so good. Let me give you an extra $5,000 later. It's not going to happen. You sell a 60 call for $1, it's over, right? Okay. So why would you ever do it? Because it has an incredibly high probability of keeping the dollar. Look, if the stock stays flat over the next month, well, first of all, once you sell the 60 call, you don't own stock. You have nothing to do with the stock. You just sold the 60 call. What do you do for the preceding month? You get down on your hands and knees and you just go, please don't go up. By the way, that's a bad way to trade. But I need this example to resonate with you before we go further. I need this example to, I need you to understand it. Stop fighting it, people that understand options. People that understand options fight this example because they go, he's a bad man, bad man. He's trying to sell options naked. Yes, bad man selling options naked. I get it. But this is about a concept. And the concept is very simply, you sell the 60 call and you sell it naked, you collect $1. And then you have like this month where you're just like biting fingernails and, like nervous energy all the time. See, the thing is, like, a lot of people selling options is weird because you sell options and you go, nothing's going on. Most of the time, nothing happens. And when something happens, you're like, whatever happened, the market went down and you made money and you're like, okay, like dead silence. And it's weird. It's like an uncomfortable silence. I like having like a couple thousand people on here and just dead silence for a minute. It was like, did the sound cut out? No, it amuses me because the stock stays flat and the 60 call starts to what? They start to decay. And what happens if the stock goes down? If the stock goes down, you keep your $1. If the stock stays flat, you keep your $1. If the stock goes right here, let's say the stock goes to 55. What do you do if the stock goes to 55? You go, I still keep my $1. What if the stock goes to 60? You're like, I wet myself, right? And if the stock goes to 60, now you're starting to sweat a little bit, but let's get crazy. Say the stock goes all the way up to 70. The stock goes to 70. You have a 60 call. You've sold yourself into an obligation. Chains, they're taking me away. You have 70 call, but the stock, okay, or should I say, you have a 60 call, but the stock is now trading at 70. So somebody says, I call upon you. They want their stock at 60. How do you get it? You have to go out and buy the stock at 70 to give them at 60. You're just going to lose $10 minus the $1 in there. Okay. The whole reason, though, for me bringing this up, okay, is for the simple reality of this. Okay. What's the probability that you're going to make money on this trade? I want you to look at it from a pure probability standpoint. Let's forget what you think. Let's forget about risk for a second. Break everything away. What is it? Okay. By the way, somebody came in already and said one of the questions, since one cannot sell naked options in an IRA, absolutely unequivocally untrue. You can now sell options naked in an IRA. Not every brokerage firm lets you do it. And you can sell big options premium naked in an IRA with $5,000 or more, okay, in an IRA. And you go, what? Yeah, that's a big portion of it. Like, believe me, I'm doing this in an IRA. In fact, okay, I show people the IRA all the time. My IRA, whoops, it's over here at Tastyworks. So I trade in a couple of different trading applications. Close that down, close that down. The whole concept here, I want you to see it's a high probability trade. That's it. The probability of it getting above 60 is diminished. And we can do this actually in a live trading environment. So like Wells Fargo, I was looking for a stock that's trading like near 50. Normally it's ExxonMobil. It's almost a $50 stock. Like, oh, people totally forgot about ExxonMobil. So this is not the kind of example you want to do. It's brutal. It's just brutal right now. Here, Intel. I'll go way out in time on Intel just to make a quick point. You want a 90% probability. Here's a 90% probability, but on Intel, because it's a $62 stock on Intel, you're only going to collect about 50 cents. So you'd have to sit there and you'd be like sweating and sweating, and you're like, I have to sweat for 87 days to make 50 cents. Yes. Okay. But I'm going to make a quick point about this here momentarily. All I wanted you to understand is conceptually, it's a high probability trade. Next, selling options equals positive time decay. Now, some people have heard of positive time decay. By the way, I promise we're going somewhere with this. And this is where, I had to get you guys up to speed on just the idea of selling premium. Now we're actually going to start to tweak the skew, and we're going to try to look at the skew and develop into what's called an ultimate trade. Selling options equals positive time decay. Well, when you sell options, every day that passes sees the dwindling of options premium. Okay, as time passes, the options you sold decay exponentially. Let's take just a minute to review options decay. This is where I'm going to tell you right now. Are you experienced in trading options? Okay, and somebody says, yeah, I'm experienced in trading options. Good. This is where you're about to get your brain is going to explode on this next example. I can get it out. I can get it out. This is my caffeine cup. I just keep it coming. The balance of caffeine must be perfect in order to do this. Perfect. Too much, and I can't speak. Too little, I can't speak. All right. That's the vice of choice over here. It's like 10:40 in the morning Pacific time. I'm still adjusting from again the last 6 months I've spent on the island of St. Croix, and we're going back there in a couple of weeks. But like going from Eastern time and then trading on Pacific time, it's a little weird. Like your whole day, my whole day is confused. Listen, people recognize how options decay, right? You go out and you buy an option, you buy this, whoa, my pen got way out of control. Clearly that was caffeine. I'll blame caffeine for that one. Anyway, you go out and you trade some option, you trade the option for 1 month, right? Trade the option for 1 month. And you have this $3 option, you buy it and it goes, right? So it's at $3 and then it eventually drops off to like 280. Before you know it, you look at it one day and it's like, it's like at $1.50. You're like, what happened in there? And then the option is already down to like 80 cents. You're like, forget it. And it goes to zero. How many people have lived through that? You're like, you have this $3 option and you're like, we're doing okay. Nothing's happening, but we're doing okay. And then it's trading for 280. You're like, we're going to be okay. It's only 20 cents. And you open up the platform a few days later and you're like, $1.50. Come on, man. I've already lost 50%. And by then you're never getting out. So that's the plight of the trader out there. And that's fine. Okay. So everybody assumes that option decay is always phenomenal when you have like a month left to expiration. But here's the interesting aspect of this. Okay. We're going to discover probability and premium selling tactics. Now we're going to have $100 stock. Okay. So now we have $100 stock. So let's start to tone this to real examples. So here's $100 stock. I'm going to use calls again, just to make this easy. We're going to come all the way out here and we're going to sell, okay, a 120 call. Let's just make it $1 again. And we're going to collect $1. So we're going to sell, okay, the 120 call, okay, and again, we're going to collect $1. Okay, how long is this 120 call good for? Well, that's way out of the money. Way out of the money. Let's say this 120 call is good for, let's get crazy, 90 days. The 120 call is good for 90 days. Now, that's $100 stock, and a $20 move, like inside of 90 days, that's a 20% move. We're 20%, like literally, the market has to move up by 20% to even get close to me. What am I going to do with this trade? Why sell options so far out in time? Okay. All right. Why do this? Okay. So what we're starting to bridge our way into is what we term ultimate trades. Even some of the most experienced traders in here, okay, are probably not aware of how option decay truly works. And that's exactly what I'm going to show you. So let me give you this example for the newbies. For the newbies in here, so I go out and I sell. Let's get rid of the 20%. So I'll go out and sell the 120 call. I sell the 120 call. What does the stock do? Okay. What does the stock do? Well, if the stock stays flat, I keep a buck. If the stock goes down, okay, if the stock goes down, well, for the most part, I keep a buck. Even if the stock goes up like by 10% to 110, right? Stock goes down to 90, I keep the dollar. Stock goes to 110, I still keep the dollar. Stock goes up to 115, okay? Stock goes to 115, I keep the dollar. The only way I'm losing is over a 20% rally. Can a 20% rally happen? Huh? Okay. Anybody? Can 20% rally happen? Absolutely, unequivocally, yes. Why would I want to do this trade? And why 90 days out? Because people are convinced you can't make money 90 days out. Well, let me tell you something. Let's take this from an example into reality. Guys, ready? Because here goes into when I say into reality, let's take this into reality. Right? Because what happens is a lot of people, they immediately, somebody goes, hey, you kicked off this presentation, Don, and you said you could make money on a monthly basis. Now you're selling options 90 days out. You can make options, you can sell options weekly, you can sell options monthly, you can sell options 90 days out. How do you turn 90 days out into money? Okay, how are we going to turn this into money? First of all, I'm going to go into, let's use the spiders. Let's use the spiders because you know what? The spiders are like a marquee product. Is everybody familiar with the spiders? This is the S&P 500 ETF. It's probably the most prolific product in the entire business. Prolific in the fact that nothing really trades like more contract size day to day. This thing does, 5 million contracts a day. It's already done 3 million contracts today. Here, let's do it. Let's go out 90 days. Here's 87 days. 87 days, okay? Okay, but still my heart, it's okay. Calm down, everybody. So we're gonna go out there, okay? Let's get crazy and let's go all the way out to, let's do something that's like 90%. You know what? I'm gonna go even higher. I'm gonna go to, let's go right to the 450s. Let's get crazy. Because you know what? This example could not be any better. It couldn't be any better because the example pretty much resonates with what I just discussed a moment ago. So I'm gonna write this all up over here so you see it. Okay, we're going to sell in this example. And again, I'm so close to the screen over here, but I have to be able to write on it. So we're going to go out. Oh, wrong color, man. Oh, this is a bad start. Okay, we're going to go out and we're going to sell. Okay. Oh, I'm a disaster today. Okay, we're going to sell a 450 call and I'm going to sell it for exactly $1. By the way, could I work this at $1 right now? Sure. I don't know if I want to work it for $1 on a down day, but I'll come to that in just a moment. So we're going to sell a 450 call and we're going to sell it. Okay. And that's going to be 87 days out. Okay. Time out. Do I really want to do this? I sell a 450 call. The stock is basically trading just above 400. How far does the marketplace have to rally? It's got to rally about $40. $40 against a $400 stock is 10%. But that's not just 10% on some stock. This is an ETF. This is the entire S&P 500. The S&P 500 has to rally 10% in the next 90 days. Can it do it in 90 days? Absolutely. But we're not going to hold the trade for 90 days. We're only going to hold the trade for 30 days. Let's say in this example, we're only going to hold the trade 30 days. How much money can I make in 30 days? How much money can I make in 30 days and not lose? I don't want to lose. So that, of course, is the question. How much money can I make in 30 days? Well, let's get to it. Let's close this up for a second. Now, I sold a 450 call. What's a 450 call going to be worth approximately 30 days from now? I have a great way to figure this out. Assuming that the marketplace did not move, just assume it didn't move for a second. If it moved down, you're going to make money. If it moved up, you might lose a little bit of money. But I want to just know, what amount of premium am I likely to make exactly 30 days from now? The way to figure this out, look at the 87-day option, then look at the 59-day option. Okay, from basically 60 days to 90 days is how much? 30 days. Okay, so what I want you to do is I want you to look at the 87-day options. Look at the 87-day options. Just hang on, because this is what Ultima is. Look at the 87-day options and look at the price. The 450 calls are trading for what? $1. Then I want you to close that up. I want you to look at the 59-day options and I want you to scroll to the 450 calls. Just do it. Okay, you can see I've got positions in here too. Look at all the 450 calls, 450 calls. There they are. They're trading for 40 cents. Okay. So if I turn around when there's 59 days left, okay, and I buy the 450 call, I'd actually be paying approximately 40 cents to get it back. What did I make? 60%. So I can make 60% in less than 30 days. I can make 60% in less than 30 days, okay, with selling future, far out of the money options way into the future. So what happened? People always think, but I thought that decay, was big a week to go to expiration. Told you can make money easily every 30 days. I didn't tell you what 30-day period though, did I? Okay. The 30-day period is actually out into the future. And the reason it's in the future, the decay right now of options out in time is phenomenal. And that's a huge amount of what Ultimate Trades happens to be. The decay further out in time is awesome. So you don't have to hold positions all that long. Okay. And you can see I've got positions out here that are decaying, okay, and quite profitably. You can see stuff that I've actually done inside of the QQQ. In fact, I'm going to show you everything I've done, okay, over the last quarter, everything, no holds barred. You can see positions 87 days out, 71 days out, 59 days out. Are we okay so far? Okay, are we okay? Because again, somebody said that's a lot of buying power. What did I tell you? You don't mention margin, don't mention buying power. Assume that we have that all taken care of. It's all part of the program. Yes, I'm showing the trade in the spiders, but you can do this with very nominal margin, very, very nominal margin. Okay. And I'm actually going to get there. And again, this is not going to reduce your buying power to the amount you believe it is. Okay. So get rid of all I just wish that people would come here. You got to shed some of that baggage. In fact, here, if I'm going to sell the call, why not also sell the put, right? Let's go 87 days out. Let's go to the July options, right? It's kind of a rocking day. Go to the July options and do the exact call that I looked at. In fact, I can go even further out of the money. I'll come out to something that's trading for 85, 87 cents. Should I just work this call or should I also sell the put? People don't ever ask that question. Why just sell a call, Dom? Why not also sell a put? What if the market crashes? We're covered if the market crashes. I'm going to show you that in a moment. What if the market crashes? Don't worry, we're covered if the market crashes. Okay. So I'm going to come out and I'm also going to sell a put. Should I do these separately? When I say that, I'm not trying to be facetious. Should I sell them separately? Okay. Absolutely not. You always sell stuff as a package. So I can actually hit this package 87 days out. This is actually the sale of a strangle. Here's a 452, 330 strangle for, I'll work it for 283. Okay. Work it. So I'm actually working a strangle right now in the markets. And again, I'll come back over here to my monitor tab. Okay. And I'll show you, this is the working order. This is everything. These unallocated positions, these are positions that have been in there for a while. I don't want to confuse anybody. This is actually one of the Theo Theta portfolios. There's several portfolios in here. You can look at everything. Again, it's kind of the full Monty. Yes, I'm up 8 grand today. Okay. I'll aggregate all of my accounts. It's up about 13, 14. That's not an unusual day. Okay. I have a standard deviation of about $30,000 of P&L on a given day. And again, I'm not trading like a ridiculous amount of capital here. And again, please don't concern yourself with margin. That's very, very easy to kind of circumnavigate. So I'm working this order at 283 credit. And that's, maybe I fill, maybe I don't, but I'm not going to change the price. Okay. The market moves a little bit, I'll get filled. So let this one come to me. Everybody okay so far? So let's get back to it. So I went out and I sold some premium. And why sell options so far out in time? And as I said, I want to reinforce this. You may have noticed in my example, I sold options like 3 months out in duration. Typically, when people think of selling options, they think of selling short dated options. They like to sweat. They're like, yeah, I'm just going to sell this thing for a week. And like the eyes are wide open. I'm selling, okay, comfortable stuff that's so far out of the money. Okay. It's almost impossible for me to get touched, but that's okay. If the market crashes or rallies huge, we have hedges in place. What's the word hedge mean? Risk reduction. Okay. This is where everybody I can't do this. I can't do this. And again, there's other people coming in here still talking about margin and they won't let me do this. Okay. Forget about your brokerage account. Forget about the margin. Forget about it because we'll take care of it. All right. What do you think? I worked at a brokerage firm, Thinkorswim and TD Ameritrade for 15 years of my life. Don't worry about the brokerage aspect. We can actually take care of that. Therein lies, though, why you're actually tuning into this webcast is because this isn't about just selling options premium. It's about selling the right premium. It's about selling duration. It's about selling very far out of the money. But more importantly, it's about mitigating risk. And that's what we do here, at TheoTrade is we create criteria that mitigates risk. And what criteria is, which options to sell, how far out of the money, how to get good execution prices. But let's address the elephant in the room. And what's the elephant in the room? It's the 90% probability and what we term the 10% hammer. And this, what I'm actually talking to you right now, okay? By the way, I love the questions that are coming in over here, all right? So every question that comes in there, if you don't have a broker that lets you trade naked calls, okay, you don't know. Every brokerage now, okay, doesn't do what I'm talking about. But again, never worry about the brokerage firm. It's like your brokerage firm basically is there to do what? To facilitate everything and every wish that you have. It's your capital. If your brokerage firm is restricting you in some way, shape, or form, maybe you should consider another firm. Think about that. That's always been my take on the brokerage business, even though I was in the brokerage business. So, as I said, I want to address the elephant in the room. What happens when you're wrong? Come on! For those of you that have actually traded, 90%, it sounds like really good. You're like, yeah, man, we're going to be right 90% of the time. Yeah, but the elephant in the room is 10% of the time, the market literally rips your face right off. If you do not know that terminology, it's because you have not been in the business long enough to know what that term means. Rip your face off is getting run over, literally, figuratively, whatever you want. When you trade high probability strategies and you're wrong, you get hammered. That's why we call it 90% and the 10% hammer. Okay, but let me give you actually the plight of the trader. How many of you, again, before I go any further, how many of you have honestly sold some options premium in the past? Come on, just say me, 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 me. Like, man, there's a lot of people in here today. There's a lot of people. I want to see a lot of me, 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 me. How many people here have sold some premium? Okay, so for everybody that's coming in here and saying me, 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 I'm going to tell you exactly the plight of the premium seller. Okay, so you learned how to sell premium, and you learned how to sell premium, and most people initially learn to sell premium probably in something like an iron condor, right? So sometimes you do it covered. An iron condor is when you sell options and then you buy other options to hedge the options you sold. So you sell this iron condor. Okay, condor is a bird. Okay, iron condor means calls and puts. It's a calls and puts wing spread. That's what it means. So you sell this iron condor and you put it on because you either read it or you took some class like years ago and you put the iron condor on. You're like, holy crap, that thing worked. Of course it worked. It was a 90% probability trade, right? So what do? You look around, you're like, I can't believe it actually worked. So what do? You do it again. You go out and you sell an iron condor and you're like, holy crap, it worked again. I'll remind you, of course it worked. It was a 90% probability trade. Okay. The third time, you're like, yeah, I know what I'm doing. By the third month, you're no longer doing like, you're not Captain One Lot anymore. Now you're doing a 5 contract trade, strutting your stuff. Okay. And you go out and you sell 5 contracts inside of the spiders and you're like, holy crap, it worked again. By the 4th or 5th trade, you're no longer even trading in the spiders. Now you put on your big boy pants. And with those big boy pants, you stepped into the SPX. And the SPX, you did a 5 lot in the SPX. For those of you that do not know this, a 5 lot in the SPX is the same thing as a 50 lot inside of the spiders. But the marketplace, it knew that you did a 5 lot in the SPX. The marketplace was coaxing you to do a 5 lot in the SPX. It could come on, a little bit more. But it's always the 4th or 5th trade. And it waits for you. And it lets you put the trade on. And all of a sudden, train wreck. Not only did you end up losing everything that you made in the previous 4 or 5 trades, but you ended up losing everything in half of your trading account. And somebody goes, I'm never going to sell options premium again. And everybody does this. But some of you, okay, by the way, and I make fun of this because I know it's like I could see your account. Yeah, 15 years. I've seen all of this. Okay. You sell premium, get wiped out, sell premium, completely wiped out. Okay. And that's when, that's the, I get sick of it after a while. Like seriously, when you watch it from behind the screen, from the other side of the screen, you're like, it's like watching a really, really bad movie. Like people don't get this. Like I got to see everything at a brokerage firm for 15 years, like watching this really crappy movie. And you're like literally screaming at the screen, watching this movie. You're like, lady, don't go in there. There's a guy with an axe in there. I'm telling you, there's a guy with an axe in there. And they still do it. And it's brutal. Okay. And if you haven't done that before, you haven't sold premium. Okay, and I'm serious, that's the way it goes. But then some of you actually, you get through this and you go, I sold premium, sold premium, sold premium, took a massive loss. Then you actually took another class, right? Took another class and you go, I learned how to fix what ails me. I love this one. So I can fix it. I can fix it. I know I can fix it. And fix is a really dirty word. Fix is a dirty word because 15 years in the brokerage business, I'm totally a cynic about fixing good trades gone bad because what you're doing over here, anytime you're fixing a trade, there's no way to fix a trade. Do you not get that? There's no way to fix a trade. All you're basically doing is more commissions, more risk, more commissions, more risk. You go, but I fixed it. Okay. No, 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 no. You just made a big amalgamation of crap because anytime you're fixing a trade, it's more risk into an already losing trade and racking up more transaction costs, right? Yes, some fixes may work, but the very notion of fixing a trade puts more good capital after bad. You got to throw bad trades out like yesterday's trash. Like the thing you have to understand about trades gone wrong, and this is the analogy that I've used for years. You take a car and you just launch it off of a cliff, and then you bring it to a body shop. Okay, and you go, they're going to look at the car at the body shop, and they're going to be like, "Holy crap! What'd this thing do? Go off a cliff?" And you go, "Actually, that's exactly what happened." They go, "Yeah, that's a total." And they go, well, I want you to fix it. They go, well, this is a $50,000 car for the low price of $55,000. We can fix it. And you go, that doesn't make any sense. Yeah, same thing with your trade. Do it right. Learn how to correct good trades gone bad. You got to understand it's a piece of junk. Let it go. Let's learn to sell options premium in a much more effective manner. Okay, selling options premium it's not about one or two trades. Okay, it's about an inventory. And I want you to actually remember that phrase. Okay, inventory management. What is inventory management? It's just that. Some of your inventory, okay, you kind of play hot potato. We're going to go out and we're going to sell stuff with 90 days. Let's just say 90 days. Okay. And it's going to burn for 30 days. And after 30 days, it's going to make 60%. We're going to take it off. And it's going to make 60%. We're going to take it off. We're actually going to be managing multiple expirations. Let me show you actually how it works. So let's assume that this is the spiders. Would the spiders be okay? So let's make this SPY. And the spiders are trading right at what? 411. A moment ago, you actually sold me what? Okay. I turned around and sold a 450 call. Okay. Sold a 450 call. Then what puts did I look at? What puts? Okay. I believe they were the 320s. Well, we can go look. So what am I working? Yeah. 330 puts. Sorry, 452 in the 330s, but that's fine. Neither here nor there. Close enough. Close enough for what we're doing over here. So that we're all the way out here and we're selling the 320 puts. Stop right there. The market right now is trading, okay, 411. Okay, and I say stop right there. That's a recipe for disaster. It's an absolute recipe for disaster. Why? What can happen to you in this? Okay, because I want you to understand that inventory management, it's not about go out there and just sell something and then sit back and sip your caffeine. Right? It isn't. So what should I be doing here? Okay. And I love this. When I go through this, okay. I like this. Okay. I like this. There's some great questions coming in over here. By the way, I'm going to answer all these questions towards the end of the presentation. Some of the best questions I've had in a long time, really long time, serious. Some great questions flying in over here. So what's wrong with this? I'm going to tell you exactly what's wrong with this. This thing has open-ended risk. Okay. What happens if we actually rally huge or sell off huge? You have to realize, like, we could get to 450. Okay. We could get down to 320. What if the market crashes? What if? Okay. This needs, okay, hedges. You have to have definitive hedges in place before ever executing inventory. I mean, for the most part, when you think about inventory management, I want you to think like this is your business, okay? You are now Amazon. What does Amazon start with, okay, when they have inventory? They start with something to actually keep that inventory in. What are you keeping this inventory in? You got nothing. Okay, you're out there completely and totally naked. There are 3 definitive risk metrics that we use. Okay, and I'm actually going to write these up here. We have a V, VS, okay, which is known as a VIX vol spread, okay? We have an RTS, which is known as a risk twist spread. And last, but definitely not least, okay, we have the mighty gamma iron, okay? These three are actually designed to mitigate exposure. Allow me to explain for just a moment, and then I will actually detail a little bit about premium selling and about inventory management, okay? What a VIX, let's just focus on the VIX volatility spread for a second. What a VIX volatility spread will do, okay? You tell me, if the marketplace crashes, what does the volatility index typically do? Right? So if the marketplace crashes, what does the volatility index typically do? So I think the best way to actually answer this is to look at the volatility index. All right, let's go over here to a chart and let's look at the VIX. Okay, the VIX spikes. It spikes. The market tanks, the VIX spikes. This is the last spike inside of the VIX. I don't care if there's writing all over the screen, don't worry about it. Okay, the VIX spikes, the VIX spikes, the VIX spikes. Every time the marketplace crashes, the VIX spikes. Are you aware that you could actually use different spreads? And you can see positions in my account here, okay? I have VIX volatility spreads on. And what the VIX volatility spreads do, okay, is that they are there and they are designed to explode in value if the marketplace tanks. Now, again, don't you dare worry about margin over here. I told you, the whole margin's off the table right now. It's not even in consideration. Buying power reduction, don't worry about it. But if this marketplace tanks, you're going to have a VIX spread that's going to puff up, okay? And you will have to pay a little bit for this, but it's the same thing as, like, you know, if you're Amazon and you wanted to actually build a business like that, you have to go out and buy a warehouse. You have to buy some type of structure to put, okay, to put your inventory in. So what are we going to do? If I've got a VIX volatility spread on, okay, and I know that that VIX vol spread is going to cover me for the next 60 or 90 days, what I can actually do is freely start to sell inventory. Now, obviously, you have to know, okay, you have to know how to build this inventory. I could sell like the 300 puts. I could be selling the 330 puts, okay? I could go out there and sell all kinds of stuff simultaneously. I could be selling the 460 calls. I could be selling, okay, the 440 calls. And again, I created this lovely inventory. To the downside, I have a VIX volatility spread. So if this marketplace was to crash, I will take some loss. I will take some loss. But that loss, like that body blow, that's going to be covered in very large part by the explosion of a VIX volatility spread. Okay. In fact, it even made, you know, national news the other day. Okay, made national news and everybody got it all wrong. There was a VIX spread that was actually done out here in June. Somebody traded a VIX spread. I'm just going to show you it. Okay, they traded a VIX spread and everybody thought this was a bearish trade. Okay, and it absolutely unequivocally was not a bearish trade, but they did 250 some odd thousand contracts. I apologize, it's further out in time. I think it's the July. It's the July. Here it is. Okay, that's actually part of the VIX volatility spread. They traded 250,000 contracts or 240,000 contracts, okay, of a VIX spread. And it makes perfect sense, but they weren't doing it to be bearish. They were actually doing it to hedge the sale of premium. So they go out and they do this monstrous VIX spread, okay, gamma irons and so forth. What's a gamma iron? Gamma iron actually reduces risk to the upside, okay, where we actually have an inside hedge. Selling premium is not that complicated. Selling premium is just knowing what options to sell out of the money. Then it's a function of how do I control the risk? Selling options out of the money, everybody just figured, look, he went out 90 days. And I know that some of you are watching this right now and you're like, I'm going to go out 90 days and I'm just going to sell some options. I'm going to try this out. Do not do it. Okay. This is the part where I say, do not try this at home, because you need, all right, you need the VIX volatility spread to reduce that risk, because that's what selling premium is, right? All we want to do is get out there to sell some juice. It's ultimate juice. It's further out in time. It's a lot less risk. Okay, get back, get hedged. And when the cavalry comes and the sell-off starts to ensue, okay, that's actually the best time to sell premium. I'm telling you, people, this is why you want to sell premium. Premium can now be sold in small accounts, even under $5,000. I've alluded to that so many times today because most people aren't aware that they think, I can't do this. I can't do this. Yeah, stop with that, right? you're producing positive theta decay. So it's positive decay. You can also use this to enhance existing positions, provides an extraordinarily high probability of success. Most of the time when you're selling premium, you know what happens to those VIX spreads? Okay, it's like this little insurance policy. You're not going to use it. You hope to buy a hedge. Okay, and what happens to the hedge? You're like, the hedge expired. Worthless. But good, because you never want to use a hedge. A hedge is a sacrificial lamb trade. You never need to buy or sell the stock. And here's the reality: you can be wrong on market direction and still produce profitable trades. And I'm telling you, you need this. You need this in your life, and you need it now because markets, it doesn't matter. Like, people kind of have the tendency to like, whatever, man, markets at our all-time high, man. Yeah, until we have one bad day. We have one bad day, then what are you doing? Listen, selling premium could potentially bring in consistent returns while minimizing your risk. And that's one of the key constraints over here. You have to learn how to mitigate that risk. Would you like to actually learn how to sell premium, minimize risk the right way? Let's discuss a little bit about criteria. So what I'm going to do when I talk about criteria is the nuts and bolts behind this trade. Like, criteria is, what options did I actually sell? What options did I sell? Well, he went out 90 days. Well, what probability? What products? Can I do this in Tesla? Should I do this in Tesla? Can I do this in other stocks? Like, should I just trade the spider? Should I do ETFs? What should the volatility be? Okay, all these definitive pieces. Okay, there are recipes, okay, for this stuff. Before I get there and before I really get into detail on the criteria, here's a few live trading examples. I'm just going to tell you right now what I'm about to show you. Hang with me. You're going to want to see this. Okay. We give absolute, unequivocal, full disclosure. Full disclosure means you get to see everything. And I like to display this because, listen, there's days I'm going to open up my account and there's days things are not going to look so rosy. Okay. There's days, listen, if I can make $7 grand, there's days I'm going to be down a little bit. Okay. And I like to tell people that right now because so what? Okay. He's up $7 grand. No. Okay. I'm not. I show everything in all accounts. Here's about $12,000 of P&L. Okay. But I also have a Tastyworks account. Okay. And you can look at positions. You can look at activity. We show everything. This is every trade that I've done in the IRA. Okay. Not a huge amount of stuff, but this is a portfolio that I build specifically for our clients to watch. But this is every single trade. When I say full disclosure, I mean full disclosure. Okay. We don't hide anything. We don't like it's the full Monty. People are like, well, what's the percentage return? I'm going to show you every trade I did pretty much in the quarter. Okay. Here's a few live trading examples. By the way, variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts. All the trades I showed you. Now, here's the first trade. I'm going to actually start. I have a couple trades back in December because I just want to tease a little bit here. I did some Tesla trades. And the reason I want to tease you about the Tesla trades, in Tesla, I sold calls. Okay. Now, what was Tesla doing back in December? For those of you that are uninitiated, unaware, or just hiding under a rock, okay, what did Tesla do back in that time frame of December? It was basically straight up. Okay, the stock was straight up. I was selling calls and the stock was straight up. Okay, so I want to just familiarize yourself with what you're looking at on the screen. Then we're going to start to run through. I have an entire quarter. I'm going to show you literally until trades that I've done till today. All right. So this is actually November 30th. Okay. This is December 4th. So the exact date and time is in here. Okay. This is Tesla. It shows the exact expiration, the strike that I traded, the price that I initially look. This is a sell to open, and this is a sell to close. Okay. And an 83% return. If you do one contract, this would be $390 and I'd be buying it back for $65. If I did 10 contracts, this would be $3,900 bought back for $650. Does that make sense to everybody? All I'm showing you, okay, in this screenshot, and it's just easier to do in a screenshot. All I'm showing you in this screenshot is the orders taken from here. Okay, let's actually go back to my this account. This is everything I've done in Tesla. Okay, here, I'd have to go back. Obviously, I'm back in November, so okay, I'm just showing you these screens. Okay, this is all the way back to apparently December 14th. We're not quite there yet, but when I say we're not there, I showed you trades even further back here. It's everything I've done in Tesla over the last 160 days. Okay, you can see every single trade. It's no holds barred. Like, look, there's the 950 call. There's the 950 call. There's the 950 call that I opened. Here's it closed. I opened it again, closed it again. I'm just showing you, like, again, full disclosure in here. So this first trade, I sold a call, and this was actually one of the ultimate trades. 83% return. Next one, here's another Tesla short call. This is actually opened on December 14th, closed on December 21st, 90% return. Okay. By the way, I sold the 950 calls in the first trade. This is the first trade, 950 calls. Second trade, sold the 950 calls again, the exact same calls. Fun. Next trade is also on Tesla. And again, I'm showing you the Tesla trades because I sold call options. And I said, as I just wanted to tease you a little bit, Tesla was going straight up. Okay. This is actually one of my favorite trades because here we are, a couple of days, sold the 1260 calls, okay, with a 58% return. Sold them for 450, bought them back for $1.90. And it only took about 3 days. Okay. Now, here's a little bit of change. This is a bond position. I wanted to show some variability, some flexibility in here. In this bond position, this is a trade that I actually put on, and the bonds, they moved a little bit favorably, but I sold bond puts, okay, for 14 ticks, bought them back for 6 ticks. That's a 57% return. Okay. Next, I actually sold another bond put here. This is now the beginning of the year. Sold another bond put for a 53% return. Here's an IWM short call. Okay. Again, bear with me. We're going to go through trade after trade after trade after trade. Okay. Here's a IWM short call where I went out there and sold a call on the 25th of January, bought it back on the 27th, 62% return, sold it for $1.46, bought it back 56 cents. I remind you, each and every one of you, okay, each and every one of you right here, this could be $146, or it could be what, 1460, it could even be 14,000, right? So that is the flexibility of the trade. Next one, another IWM short call for a 53% return. This is the 240 call. You can see the strikes. By the way, this is a February. These trades were done in January for what? February. This trade was done in January, okay, for February. This trade was the Tesla short call. By the way, this is it. This is the holy grail of all Tesla trades. I sold the 1575 calls and I did it for $2.66 and covered them for 64 cents. Why do I say it's the holy grail? 1575, man. Okay. The stock, the day that I traded it, the stock was pretty much at or near all-time highs. That's why I call it the holy grail. And here's the irony. I had no idea it was the all-time highs. I could care less. Like, I'll tell you right now, okay, on the Tesla trade, I don't think I even looked at it. Okay. It was right here on the 26th that I put that trade on. I never even looked at it. I sold the 1575s, people. 1575. That's sick. You know how far out of the money that is? Okay. I mean, the stock would have almost had to double for me to even take a loss on here. Why not collect $2.66 for a 70% return? Next one, the SPY short put. Here's actually a trade where I'm all the way out into the March expiration, trading it in January for March expiration, 279 put for a 60% return. Here is a SPY short put again for a 50% return. Here's a SPY short put for a 51% return. Every one of these is live trades. Every one of these is a trade that I executed, okay, and sent out to our clientele. SPY short call, SPY short call. Here's one again, executed and open for $1.20, closed 52 cents for 57% return. Here's another one. So we're still in the February timeframe, okay, for a 49% return. Okay, SPY short call. And again, I'm just showing you inventory, inventory, inventory. By this point, you're probably bored out of your mind. You're looking at this, you're like, he just does the same thing. Okay, here's a 430 call, closing the 430 call for $1.82. I opened it, 91 cents, 50% return. Okay, inside of what, about 10 days of trade. Here's one that actually took some time, took a full month. I sold a QQQ short call, sold it for 99 cents, bought it back for 38 cents, 62% return. Getting a little bit closer. Listen, don't worry, we're going to come right up to today. Here's a QQQ short call, held it for a period of a month, 53% return. Again, look, it's January and I'm already selling April. Okay, it's January and I'm selling April and 53% return. Here's another one, took about a month to come to a conclusion, 50% return. Here's another one. Again, these are all QQQ and they're all different strikes. Right? Here's the 385s, the 390s. Here's the 355s. Okay, QQQ short call. These are all the way out in the Marches. 64% return. QQQ short call. Okay, these are the March 31st. Okay, 53% return. Okay, we're still basically in the February timeframe. 57% return on this short call. It's the 370s. Here we actually have the IWM. Again, switched up to the IWM. 250 calls. Okay, that trade was held for exactly a month. 56% return. Here we are, period of just about 3 weeks, 240 call in the IWM, 50%. Here's another one, IWM short call, 3 weeks, 54%. IWM short call, about a month, 54%. QQQ short put, 52% return, 49% return here in the IWM short put. That was actually only held for a couple of days. Here's another short put, 47% return, 49% return, 51% return, 50% return. By the way, I'm back over to bonds. So you'll see me trade bonds. I like bonds. Bonds are rocking right now. Bond volatility is pretty good. Here's the IWM short call. Now we're actually getting a little bit more current. We're about a month away from where we're currently at, 54% return. Here's the IWM short call, 51% return. Here's an IWM short call, 50% return. Here's a SPY short call, 50% return. IWM short call, 53% return. Bond short put, 50% return. Timeout. I did quite a number of bond trades. It looks like a lot, okay? But if I go into my portfolio, here's the account statement, and I type in /ZB, okay, that's it. That's everything I've done. Like, this is not like a catastrophic, oh, it's a lot of trades. I'm just showing you trades. Like, this is 160 days back. I'm showing you trades though that, listen, open, close, open, close, open, close, open, close. Not exactly like, exciting, right? Just execution, 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 in, out, okay? But I want you to see, these are the 143 puts. Those 143 puts, these things got a little scary. Go look in the account statement though. Where are the 143 puts in here? Okay, there they are. Okay, there are the 143 puts to open. Okay, and you can actually, if you kind of scroll through here, here are the 143 puts to close. So I opened them right there for 16 ticks, closed them right there for 8 ticks. Okay, 50% return. IWM short call, 51% return. IWM short put, 50% return. Now we're actually in the month of April. IWM short put, 52%. IWM short put, 52, 53. Here we're back to the bonds. So we're kicking it back and forth. This is back in April 6th, 53% return. Bond short put, I just bought this one back actually the other day for a 73% return. And this one I actually did, if you're kind of curious, off mobile device. I actually flew that day. I think that was exactly a week ago. I had a stopover in Miami, closed out of a position, kept going. Here's another one, bond short put. I also bought this one back for a 59% return. Another bond short put. Closed on the 15th for a 56% return. That takes us to today. Today, I actually closed the IWM short call. You can see I opened it for 79 cents, closed it for 38 cents. It's a 52% return. And here again is an IWM short call, okay, where I closed this. Apologize. This is today. This is the 20th. This is a 50% return, okay? And here's an IWM short call closed today for a 51% return. Speaking of which, it's just easier to show this in my account. The trades that were closed today, these are working orders, okay? Here's my filled orders. So here's the IWM trade that I bought back for 37 cents and 50 cents, okay? Those are the trades that I just covered. Here's the IWM that I just bought back for 37 cents. Literally, as I said, okay, everything is full Monty. Like, you don't have to, look too deep in here. Like, if you want to see everything I did in the IWM, okay, see everything I did in the IWM, just go like 90 days back for the quarter, just to make it a little easier to see everything. Okay, there's a few odd trades out over here that I did for another portfolio. But for the most part, it's open, it's closed, it's open, it's closed, it's open, it's closed. You just scroll through my entire inventory. Okay, everything is in here. And again, that's in the IWM. Okay, we can display spiders. There's 34, the last 90 days, only 34 fills, nothing too crazy, just opening and closing a lot of individual items. Okay, and that's, listen, this is what inventory management happens to be. And, I want you guys to understand though, this isn't just about going out there and selling premium, it's about mitigating the risk. But what better time to learn a new skill that'll literally last your lifetime? Like, whenever you're ever going to have time like this, most people are probably working from home. Okay, if you're not working from home, some people are still literally sequestered, I like to call it, to their home, quarantine, whatever. Okay, but this is a great way, to emerge stronger and in better financial shape. And that's a big part of going out there and selling premium. But this is not sit in front of the screen all day long. By the way, what our members are saying, I threw this in here, just a smattering of some of our members, but Daniel Fabian said, hey guys, new member, been lurking in chat for about a month, was short the SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. Brent W, you won't find a more supportive and more profitable room anywhere in the retail business. Listen, if you don't have a huge amount of time, what we're doing with Ultimate Trades, okay, is extraordinarily hands off, right? Every trade, though, that I've showed you today was displayed live. By the way, I'm still working an order that we put in a moment ago. The trade results, though, it's perfect for, again, being hands off. It's perfect for part timers. Selling premium is hands off. You can even use good till canceled orders, okay, to buy back the premium. After you sell something, you can literally use what they call a GTC order to buy it back. So even if a fraction of your time is enough to see strong results. Like, listen, characteristics of selling Ultima Premium. The attributes of selling, high probability premium are undeniable. You never have to buy or sell the stock. Risk is limited to precisely your comfort level. You can actually dial this stuff in. Today's actually a great day to explain it because some of you are probably looking at your portfolios today. You're like, it's scary today. Okay. It could be scary today. You don't know what well, listen, we're almost to the, an hour and a half left in the trading day. S&Ps look a little sketchy. I mean, some people are going to lose a lot of money literally today. You don't have to. You can learn like risk mitigation tactics and learn how to sell premium around that risk mitigation. So again, risk can be dialed in. You don't ever use a stop order in this, ever. Okay. You can vary timeframes, and varying timeframes minimizes your risk. The probability of profit obviously is extraordinarily high. It's also a perfect strategy, though, to enhance one stock portfolio. Maybe you want to learn to sell premium and Ultima Premium around shares that you already own. So it's an excellent tool, okay, for those that have a portfolio, but it's also an excellent tool for those seeking to build an account. And there are retirement accounts or, fair game. And there's new products available in the marketplace that allow you to sell options premium really in any size trading account. If you have over $2,000, okay, you can sell options premium, okay, exactly the way that I am doing it here. Now, we're going to build a portfolio of options. Listen, do not let the options portion of this intimidate you, okay? It couldn't be easier. People try to make options way more difficult than they need to be. They really do, okay? They talk about they got a straddle and a strangle and, a double diagonal and a straddle strangle swap and a triple naked bat flip trade. Forget all that crap. You buy it or you sell it. There's calls, there's puts, you buy them or sell them. That's it. That's been that way since the 1970s. You have a call, you have a put. You could buy it or sell it. How hard can this be? Selling premium can be done for minimal credits and minimal risk. However, the sale of a premium, though, it's akin to a massive chainsaw. And I always use this analogy whenever I'm talking about options. And I want to drive this analogy home to you. Like, listen, options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But if you do not know how to use options correctly, you're going to lop off a couple of fingers. I mean, if you wanted to build a house, you're going to use a power saw. But if you don't know how to use a power saw, lop off a couple of fingers. Options are no different. If you know how to use options, they're going to be the safest way to get where you want to go in this business. If you don't, you lop off a couple of fingers. Okay. Listen, you can sell Ultima Premium and you can minimize risk. And maybe, again, you have limited experience. Again, don't let that portion intimidate you. You're going to need these strategies for the foreseeable market future. Like this marketplace, like how many people would agree with? It's downright scary. Why is it downright scary, Don? It's at all-time highs. Okay. The news out there gets just more and more wild, right? You can feel it. You can almost taste it that you're sitting on risk. And anybody that buys the market right now, I'm not saying don't buy the market, but I am telling you this, if you buy the market right now, you're buying into more risk than anybody has ever taken in the history of the market. I say that without unequivocation. If you buy the S&Ps at 4,100 and change, exactly where they are right now, you're actually paying more than like anybody has ever really paid for the S&Ps in the history of the S&Ps. Now, could they still go up? Absolutely. Or you could have one bad day. Today might be that day, right? It's just ridiculous the amount of risk that people want to take right now. And to perpetuate what? Minimal gains? How about we just go out there and sell some premium, just produce some monthly income, get back, get hedged, okay? Let everybody else get caught in the crossfire. And you're going to find out what crossfire means when volatility hits this marketplace, and it will. Listen, we can show you how and when to sell premium. It's a matter of a few hours. TheoTrade creates detailed recipes for every strategy, including selling Ultima Premium. And this the same way an analogy is like, listen, you wouldn't bake a cake without a recipe, so why trade without one? And I like this sign, be prepared, not scared. This though, this is what you need to know to successfully sell, okay, premium and Ultima Premium for a living. All right. What underlying stocks or indices make the best ultimate premium selling candidates? There's somebody actually in the chat just said it a moment ago. They go, what's the criteria? Well, what underlying stocks, indices? What's going to make the best premium selling candidates? If you looked into my account, you thought about it. Okay, think about the account that I just showed you a moment ago. Clearly, I was using a lot of index products. I showed you a lot of spiders, some IWM, some QQQ, a little bit of bonds in there. There was some Tesla. Okay, there was a little bit of Tesla, but I tell you what, you have to know the right candidate. Sounds easy enough. Okay, what volatility should you seek out? You have to know precisely a volatility. There is a volatility constraint here. And I'll tell you something interesting about Tesla. Tesla was a great candidate in December and January. It is no longer a candidate because its volatility is out of bounds for ultimate trades. Okay. What options expiration do I select? Okay, hey, we just filled our trade. So what options expiration do I select? You know, when we talk about what options expiration, again, I just filled the trade that we talked about a little earlier there. So inside of the spiders, we just sold the strangle. So I'll just move this up to my Theo Theta portfolio. Strangle! So what options are you actually going to use? Look, there's 1 day, there's 3 days, there's 9 days, there's 31 days, 34 days. Start going out in time, 150 days. If more time is good, then let's go all the way out 150 days. You know how many expirations there are? You know, we didn't even talk about the SPX. The SPX is like the mother of all products. There's like 100 different expirations that you have to select from. What should be the delta of the option I sell? Delta, delta, delta. You need to know precisely the delta of the option you're going to sell. What options do I buy against my positions? Unequivocally, the most important thing. There is one aspect that I did not cover here today. There's one aspect and one aspect that's big that I didn't cover. Okay. Told you I'm going to show you pretty much everything. Pretty much. What didn't I show you? I did not show you the RTS. I did not show you, okay, the VIX vol spreads. Right. And that's where I was like, oh, you know, he's holding back on me. The secret's in the sauce. No. Okay. The hedging component of this is the most critical because what you're doing in one case, right? And I just want to show you this in one case, you're actually selling an option. Then you're turning around and buying other options against it. But the options you're buying are the hedge. I showed you the sell, the sell, the sell, the sell. I didn't really show the hedges. By the way, the hedges, all the hedges I've used in the entire quarter, I lost money on. I lost money on my hedges. Why? Because hedges are sacrificial lambs. You want to lose money on the hedges. You know, you basically put up there, sacrificial lamb. Here's my lamb. You must feed the marketplace. If you don't feed the marketplace, the market gets angry. You have to understand that. If you don't understand that, you haven't traded long enough. What options do I buy against it? How do I build the position? How do I go about actually structuring an inventory? As I said, like I literally in my head, and this is since the beginning of my trading career, I look at this as inventory management. And today I kind of call it Amazon because I think Amazon is such a great analogy. What does Amazon do? Okay. They sell like a ton of crap. Okay. For very small edge. They just go boom, 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 to keep banging it out, banging it out, banging it out. Okay. And they know that from time to time, boom, they get hit here, they get hit there, they take a loss there, a loss there. It's par for the course. It's par for the course, baby. Just a lot of trades, a lot of little inventory scattered everywhere. And it's easy, easy to manage. I'm telling you, it's easy to manage. It's okay. That's what building a position is about. Do I need a large amount of capital in my account? Absolutely, unequivocally, no. Okay. $2,000 and you're good to go and you can actually sell premium with $2,000. Okay. What's the right amount of risk for me? We have to help you dial in. If you have a $2,000 account, you don't trade a $2,000 account the same way as you trade a $2 million account. Okay. You do have to differentiate. Somebody asked me about percentage returns a little bit earlier. Listen to me. Percentage returns differ. If you have a $10,000 account, you know, somebody says, can I make 100% in a year? Yeah, on a $10,000 account, but you're going to have to put a lot of that capital at risk. But if you have a $2 million account, you don't put the same amount of risk on the table. Okay. It's different. Trading capital and percentage returns, it's not linear. Again, you know, you can make more in a $10,000 account, but you have more, you know, of the $10,000 at risk. And you need to know that, right? You know, what are the percentage returns supposed to be? By the way, what was the most common percentage return that you saw in an individual trade? What was the most common one that you saw? Okay. Because I'm like clockwork, people. I just don't care. I will close anything. If it's profitable, bang, profitable, bang. I don't think about it twice. I should just try to squeeze a little bit more premium. I don't do that. Hot potato. Okay. What do I make? I make my percentage return, boom, move on. Make my percentage return, move on. Okay. It's hot potato. Anybody actually get it? couple people got it. The most average like return in there. Okay. People are paying attention. How do I protect myself if the market crashes when selling options? VIX volatility spreads, risk twist spreads. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay. Whenever I talk about like recipes, I think the best way to give you an analogy for this, what TheoTrade is really about. And we say we create a recipe. We create very and highly detailed checklists for a strategy, okay? But this is more than a strategy. What you're looking at with Ultimate Trades is a trading system. And what we actually go in and do is tailor a specific, pre-flight checklist. And the way that, again, I give you an analogy for this, if you're going to hop into the cockpit of an aircraft, right? If you're going to fly that aircraft, what do the pilots do? They literally get into the aircraft, right? They don't just, hit the gas, throttle up, and they're ready to go. That's not the way it works. They actually get into the aircraft. And the first thing they do is they probably pull out, their lovely little iPad. Most of the pilots today use an iPad. Some of them still actually use old school checklists. They literally go through items, check. Flaps work, check. This works, check. It's exactly what we do here at TheoTrade. So we have a pre-flight checklist that literally designs and implements an individual trade. But then more importantly, more appropriately, once you're into the trade, there's variables. Okay. The variables are what if the stock goes up? What if the stock goes down? What if the volatility explodes? What if? Because we're going to find out is trading is answering the what ifs. What might be a good stock candidate? What's the correct options expiration? How much capital do I commit? What strike price options do I sell? What options do I buy? How can I limit my risk? TheoTrade has those answers. So we build these recipes with definitive criteria, checklists for each strategy, and more importantly, each unique variable you're going to encounter. When you think about variables, what if expiration's coming? What if there's a dividend payable? What if? And again, everything is about variable. What can happen to you? The market can go up, the market can go down, the time can move forward, volatility can move. Okay, what if the marketplace crashes? What if? TheoTrade has your answers. We'll give you what? The right probability for the trade. How many option contracts do I do for my account size? When do I close my premium sale? What if the stock market sells off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing position? It's like how, when, why, at what price? And I'm telling you right now, that's just the beginning of the variables you're going to face while selling Ultima Premium for a living. Okay. You can read about selling Ultima Premium. In fact, I always kind of, tell people Google this stuff all the time. They go, oh, I'm going to Google how to sell options. You can Google it. I guarantee you 20,000 pages will show up. If you Google right now, selling options premium, 20,000 pages are going to show up. Okay. Maybe you even know how to do this already. What you do not have, okay, is the criteria. What you do not have is the understanding of what Ultima Premium is. You need TheoTrade's recipe for success. Okay. This is just my experience, but I have 20 plus years of trading experience. I also want you to know TheoTrade, this is not like a one-trick pony. I'm not the only one that, is an instructor here at TheoTrade. We have 7 other full-time traders. Okay. I have 20 plus years of trading experience. I've had access to client order flow for over 15 years. I've viewed and studied millions of trading accounts. In fact, I should say we have viewed and studied millions of trading accounts. The we in that, there are several individuals here at TheoTrade, okay, that are originally derived from Thinkorswim and TD Ameritrade. And I ran education 15 years at a firm with the largest options order flow in the industry, bar none. No one traded more option contracts than Thinkorswim and TD Ameritrade. Okay, that's why Charles Schwab just bought them. Listen, criteria. That's where it's derived from. It's derived from experience. It's derived from other retail clients. It's derived from us actually sourcing, okay, tremendous amounts of data to come up with what is most effective in terms of the premium sale. Criteria is your recipe for success. The following strategy, the Ultima selling premium, okay, and the corresponding criteria, it does require the utmost attention to detail. And we literally spent years fine-tuning this trade, okay, and this criteria. And when we approach the section on criteria, you follow the steps to build a trade. We built a full-blown 5-hour course on this. It's the Ultima Income Generator course. That 5-hour course, okay, we just recently recorded it. I was the instructor. Now hang with me because immediately everybody sees the price tag for some other course that you've taken and it's $497. Okay. Hang with me for a second because I'm going to display something to dramatically differentiate TheoTrade from anything that anybody's ever heard of before. And I want to make that really clear. So listen, there's a 5-hour course. That 5-hour course, it's archived already. We just recently recorded it. We cleaned it up. We packaged it. It's available immediately for streaming. Okay, 24/7 access. You can even download the course onto an iPad, a phone, okay, an Android device. Somewhere over here, I have an Android device, okay, and the class slide deck that includes entry and exit criteria. Those checklists are available immediately for download. But the one aspect that I want to reference before I go any further today, okay, and again, I'm going to show you, people look at this and they go, oh, great, it's another class for $500, okay? And I venture to say that many of you've probably been to some classes, and the way that most education firms work, okay, is, as I said, a vast differential from TheoTrade. When we built TheoTrade, you have to understand that we've seen everything in the entire industry, okay? I've worked on the brokerage side starting in 2001. I've seen every education company, okay, out there. I mean, everything from like, some guy that was a school teacher turned into a trader, some guy that was a taxi cab driver turned into a trader, okay? How about TheoTrade's a bunch of traders that are traders that predominantly did work in the market making industry, but ran a major brokerage firm for 15 years. What we do here, the way that we differentiate is most places go out there and you sell you a class, and they sell you a class for $500, okay? And then they make you buy an indicator for $500 to go with the class. And then before you know it, you have to take another class for $500 to learn how to use the indicator. And then all that is obsolete and you have to take another class for $500, okay? We're putting an end to all of that. And I'll clarify before I even give you, we're going to give you some really strong bonuses today, okay? But before I even get to that, I'm just going to tell you right now, okay? At TheoTrade, okay, this is the one-stop place for everything you're ever going to need in this business. Whether you're an investor, whether you're a trader, okay, we give you everything. When I say we give you everything, I mean, okay, this is no holds barred. We give you access to our portfolio. You get to see what we do, okay? When I say no holds barred, we give you our access to our portfolio. We give you access, okay, to anything that you're going to need to support yourself, okay? Not just the ultimate income generator course. We'll give you access to everything that we've ever done at TheoTrade. So when people come aboard at TheoTrade, they get access to everything TheoTrade's ever done, not just this class, but every class that we've ever done, which I'm about to explain here momentarily. When you come to TheoTrade, you can email us, okay, for support. When I say email us for support, you can literally email us and say, Don, am I doing this trade right? Most of us come from the brokerage world. We know how to answer trade and trade related questions. You can't, as a client, you can't even call a brokerage firm anymore. Who are you going to call? You're going to call TD Ameritrade? You're going to be on hold for 2 hours. You're going to call Charles Schwab, 2 hours. Okay. Who are you going to call? I really want to know. Like, what are you going to call, like Interactive Brokers? Hey, how you doing? They don't even pick up the phone anymore. Nobody does. Okay. We're your support. You need support. We are that support. So not only do we actually support you, okay, we actually let you see our trades. We give you the course. It's everything that you're going to need, again, to be an investor or a trader. I say literally everything. You think of something that you're going to need in this industry, we provide it to you. And I'm going to show you that here right now. So hold with me for a moment, because people they immediately, it's another $500 course. I'm telling you, what we do here at TheoTrade, it's like nothing you've ever seen before. First of all, the Ultimate Income Generator course, that's the reason that people are here today. This is the curriculum. So you're going to learn how to generate consistent returns, okay, with selling options, okay? Here's the curriculum. How to build a portfolio of high probability trades that generates consistent monthly returns regardless, okay, of the initial capital. $2,000, okay, is really what you need to start this. We provide detailed entry and exit criteria for selling options premium while keeping risk at a minimum. You're also going to discover option Greeks and learn how to manage all of your positions through one easy number. In addition to it, you're going to learn to use a risk array to visualize profits, okay, and or risk before the markets ever move. So the risk array is a critical component of the income generator, like the Ultimate Income Generator course, okay? How to properly allocate in a way that reduces risk and allows you to minimize any risk in your portfolio very part-time. You're going to discover, okay, risk, okay, mitigation techniques designed to hedge the most extreme market environment. Listen, sooner or later, it's going to get wild out there. You're going to get caught off guard. You're never going to get caught off guard here. That's what we plan for, right? You're never going to get caught off guard in an unusual market environment because sooner or later, as I said, it's going to get real. Okay. How to sell premium in small accounts and/or retirement accounts. Okay. Within innovative new trading vehicles that have never been available before. There are new products out in this business that you can sell premium in a very, very small account. Before I go any further, and again, I'm going to provide you guys a ton of bonuses. Hang with me because you're going to want to see this. We also do this, and this is also a complete differential from anything we've ever done before. TheoTrade is a completely riskless trade. It's a 90-day money-back guarantee. And we do this because, and I'll just make this clear, everybody that comes here to TheoTrade, and right now, okay, we have well over 6,000 clients on the TheoTrade platform. And that is, and I'll show you exactly what TheoTrade looks like as we kind of cruise along here today. In fact, this is TheoTrade, if you're kind of curious. This is the site. And this is actually being broadcast. In fact, I can even refresh and show you it in real time. So when I say in real time, this is a live broadcast.
Sully in here? Sully, this might be one that we...
Okay, and that's Tony Rago, who's actually who's trading live right now, and everybody's actually sharing trades inside of this room. There are over 6,000 people in that room, okay? We provide a money-back guarantee for the first 90 days, and we do this simply because we only want people here that want to be here. Listen, money-back guarantee, I'll make this as clear as can be. If you're not satisfied, anytime in the next 90 days, email support@theotrade.com, receive a full refund, okay? There are absolutely no stipulations. We used to have stipulations like you had to trade with this, you got to do this, you got to do a little dance, make a little love, get down tonight. Listen, the money back guarantee stipulations, there are none. Why do we do that? Because it's the right way to go. No excuses, no questions, no commentary. Listen, just email us. Ask for your money back if you're not happy in 30 days. It's completely and totally risk-free. You go to this site, theotrade.com/SKU. It's S is in Sam, K is in kick, E is an echo, W, theotrade.com/SKU. Now, you want a bonus. By the way, feel free, okay? Listen, there's absolutely no risk, okay? To anybody enrolling anytime in the next 90 days, no questions asked. And that is actually in the enrollment. In fact, we'll even show you that when we actually jump to this site, we'll even show you it's completely riskless, which I'll come back to that. So it's theotrade.com/SKU. Feel free to enroll for it. I'm actually going to cover some of the bonuses. As I said a moment ago, TheoTrade goes beyond one class or one indicator. Like I watched this whole education business where everybody would like charge for this class and charge for this class. I'm going to tell you personally, I don't like a la carte. I don't like it. I don't like when people get charged, $5,000 by the time, you've taken a couple of classes. Like save your money for trading. Save your money for trading. Like we get it. You want everything to trade and invest. You want it at one place and you want it at one price. So that's effectively what we've built here at TheoTrade. I mean, you see in a couple of moments, we call this like the Netflix for traders because we give you everything from day one. Here's the first bonus. It's a quick start beginner's video guide. If you've never put on a trade before, we have a quick start guide. I'm going to give you the training, okay? That'll take you from complete newbie to entering into your first trade. So what does that quick start guide look like? Well, here, this is actually TheoTrade. We have a whole menu called Start Here. Options 101, Options 201, Options 301. Okay, even if you're the most experienced trader in here, I urge you, okay? Watch this, order execution part 1, 2, and 3. Remember, I spent a lot of years at brokerage business. I will give you the insight to how orders get executed at TD Ameritrade, at Tastyworks, at Interactive Brokers. Any of the major broker dealers will actually give you insight into those execution. So the first thing that we do is we give you a quick start. It's beginner's video guide, and it's packed. Like there's a lot of content, obviously, in that to get you guys ramped up. So please come here. You've never done anything in the business before. Forget even about stocks, options. We'll take you from absolute nothing, okay, into the realm of ultimate trades. Bonus number 2, we give you access to over 100 trading classes, okay? This, of course, includes the Ultimate Income Generator. It's available immediately. It's on demand, okay? But we also give you guide to small account growth with in-out spreads, guide to surviving and thriving in extreme volatility. Time out for a second. What we're saying, since we launched TheoTrade, I left TD Ameritrade. I should say I exited TD Ameritrade in early 2015. We launched TheoTrade, all right, basically in January of 2016. We give you every course that we have done at TheoTrade since inception of TheoTrade, everything. Okay. Again, it's a guide to small account growth and out spreads, probably one of the most prolific classes we've ever done. Volatility back spreads, growing a small account, black book spreads, how to collect income being short, risk twist spreads, the risk twist spread class. What do you think the hedge is? Okay, that's the hedge for Ultima. That's the hedge for Ultima. Okay, guide to selling high probability spreads, iron condor, sell premium, minimize risk, day trading NASDAQ futures. By the way, don't pigeonhole us. Don't tell me that, these guys just do this or they just do this. How about we have an instructor for every genre of trade? Literally, we have instructors for every genre of trade. So basically, if you're leaning one way on a trade, we have, instructors from everything from day trading, instructors for selling premium. We have instructors for, which we'll introduce here momentarily, for technical analysis. Okay. Covered calls, essential skills for consistency, top 10 skills. You get all of these. All of them are part of it. And that's bonus number 2. Bonus number 3, we give you an all access TheoTrade VIP membership for free. Okay. What is that? It's 3 months unlimited access to TheoStream. And what TheoTrade and TheoStream happen to be, we have a live trading chat room. I was just showing you it a moment ago. We're live right now. Okay. We broadcast 6.5 hours a day. And the traders, we push out real-time trade ideas, real-time market insights and analysis. I trade, by the way, I am on there for an hour a day. Okay. I am on there for an hour a day. I will be on first thing tomorrow morning. I do the first hour of every trading day. We have text and push notifications because, listen, not everybody can watch in real time. Like, we get that. If you can't necessarily watch the market real time, we have 5 portfolios. We have daily coaching sessions. This is continued education. And our instructors answer your trading questions via email. I'm going to tell you right now, that last bullet on here alone, okay, no one in the education industry does this. No one does this. Okay. Why don't they answer emails? Because they don't want like liability, like, oh man, this guy talked about this trade. Okay. Listen, we have spent, most of us, at least a decade in the brokerage business. Okay. I've had my series 3, my series 4, my series 7, my series 24, which is a principal broker dealer. I've also had my series 66, which is a 63 and a 65 combined. You want fries with that? Okay, that's an investment advisor. We can answer your questions via email. Most of our instructors spend 3-4 hours a day answering emails. That's part of this. That's what we do here. Okay. Speaking of instructors, here they are. If you are unfamiliar, quick rundown. First and foremost, Jeff Bierman. He's an analyst trader and he's the former chief market technician for TD Ameritrade. If you've ever been on Thinkorswim charts, Jeff Bierman actually built like half the studies in the Thinkorswim charts. Jeff is also a professor of finance at DePaul in Chicago. So Jeff actually does a lot of the continuing education here. What better? He's a professor of finance and he actually moonlights with us. And I've actually worked with Jeff for the better part of about 11 years now. Next on the docket, Matt Williamson. He's a market neutral premium selling option strategist. The only way to describe Matt is he's kind of like our engineer geek. He's our spreadsheet geek. And he's got some very, very slick courses here at TheoTrade. Next on the docket, Corey Rosenblum, senior strategist and our resident swing trader. By the way, there's a designation that several of these traders have. Okay, under CMT, Jeff Bierman also has a CMT and Brandon Chapman has a CMT. We have 3 CMTs on our crew. Most firms, even in the brokerage side of the business, would be lucky to have 1 CMT in the entire firm. We have 3 out of 8 instructors that are actually CMT and have passed that certification. So Corey Rosenblum is our resident swing trader here. So for those of you looking for a little bit of shorter term, that's your individual. Brandon Chapman, also CMT, macroeconomics, technicals, and fundamentals. Brandon Chapman also hails from the Thinkorswim and TD Ameritrade world. Brandon Chapman actually wrote most of the course manuals for TD Ameritrade. Many of you have probably read some of his material over the years. Steve Slim Miller, okay, 43-year veteran stock options and futures trader. We've got courses from Steve Miller. It changed the whole way that you view the marketplace. Actually, it's one of our bonuses here in a moment. I put a lot of weight in Steve Miller because that man has actually forgotten more about trading than most of us will ever know. He's also our resident psychologist, inner-house psychologist here at TheoTrade. We have Tony Rago. He's a NASDAQ futures intraday strategist. All Tony Rago does all day is just trades one product. He's a scalper. He's in, he's out, he's on with its life. In fact, that's who's live right now. He's got 5 minutes left to his session. Then we have Blake Young, market profile, futures, currency, and commodity trader. Blake Young also comes from Thinkorswim and TD Ameritrade. As I said, there are 1, 2, 3 individuals here that actually do come from the TD Ameritrade Thinkorswim background, not including myself. So half our instructors have been background not only in money management, but the brokerage business. Steve Miller has also managed a hedge fund, okay, as well as Matt Williamson. So again, we have a number of very, very key instructors here. This is the entire crew. We got everybody on Zoom just recently and took a quick snapshot over here. Hopefully they didn't, they weren't, too surprised by some of this. Onward and upward. Another bonus, access to 59 proprietary indicators and scans. Here's an area that I feel really strongly about. By the way, the auto expected move, I promised everybody that, okay, right at the onset, we will give you the auto expected move here momentarily. What I'm telling you is that, okay, I use a number, okay, of different studies like Quantix. Okay, I use Quantix all day long. I use this implied volatility range. Okay, I use auto expected moves. Everything TheoTrade RSI Laguerre. Okay, this RSI Laguerre is actually in a kind of a bearish format right there. Every one of those proprietary indicators and scans, every one of them we give you from day one. We don't charge you anymore for that. The point that I'm trying to make here, we don't charge you anymore, okay, for anything that you're going to need in this business. It's all included. Bonus number 4. Here's Theo Theta Live portfolio. I'm actually the trading instructor for this, okay? This is the ultimate premium selling portfolio. Just a no holds barred approach. I just showed you the trades from the first quarter. We only launched Theo Theta Live portfolio. People for years, like, let's see it, let's see everything. And I've always showed everything, but we never actually tracked every single trade to the approach and detail that we're doing right now. It's full disclosure on all trades, opening, closing, hedging positions. You're going to watch me discuss positions like never before. I mean, these are positions like, there's sometimes I would be like, oh, I'll just short that stock for the hell of it. I got to answer for everything. And we show you everything over here. So we also, okay, in addition to the no holds barred approach, we also have Theo Theta Small. Theo Theta Small is for people that have like accounts like $10,000, $5,000, $2,000. Okay, so we also have a small account portfolio. So don't think that you have to have, $200,000 in your account, because my no holds barred approach, I'll fire sometimes into there pretty good. We also have a small portfolio. Okay, this is actually what the Ultima Theo Theta portfolio looks like. Okay, this is a screenshot I took a little while ago, but hey, listen, okay, you can see all of this on the platform. Okay, this is live. Like when I traded into it today, it's live. You can see everything that we've done. As I said, everything. This is no holds barred. Everything. That's the opening trades. Then these are the closing trades. You want to sit there, you want to match them up, you want to figure out the exact percentage returns based on the contract size that you want to do, go for it. Okay, go for it. I'm telling you, this is worth your time. Okay. In addition to this, I know that not everybody can tune in like 6 hours a day or, hop onto every trade. We do updates about the Theo Theta portfolio. And in those updates, we just kind of take you through the update and say like, hey, this is everything that I did on the week. Like these trades are not like intense. You're like, I got to get on, I got to get out. Selling premium is slow. We kind of walk you into the trades. If you miss one of the trades, it's not a huge thing. It's inventory. Okay. So what? So you miss a little piece of inventory, you move on. But this is a 15-minute video that you can watch on a Friday afternoon. It updates you on absolutely everything. And I put a lot of weight into it because I spend a lot of time every Friday morning. I spend time putting everything together cleanly into one 15-minute video. Bonus number 5, a technical analysis toolkit. This is not my genre, okay? I am the option selling geek. This is Jeff Bierman, okay? Technical analysis toolkit, technical analysis 101, 201, MACD indicators, time-based trading systems, pattern recognition. There's 20 other technical analysis classes. We give you that. Bonus number 6, a day trading treasure chest. For those of you that want to day trade, that do want to sit in front of your screen, you can actually learn Tony Rago, NASDAQ futures, day trading Okay, the ES Futures Blueprint, consistent intraday strategies and setups, high probability intraday trading system. There's 11 other day trading classes. By the way, all of this on TheoTrade, I just want to show you, all of this is actually broken down for you. Like this is the start here, but let me show you the classes. Okay, option classes, option newbie classes, technical analysis, bonds and futures, stock classes, day trading classes, trend trading, pairs trading, okay, mindset. You know what? This is actually the next bonus right here. 5 essential building blocks to successful trading. I tell everybody right now, you could pay $1,000 for that class. It'd be worth it. $1,000 easily for just that one class. We don't just give you the one class. We give you everything. Okay. When I say we give you everything, look, option strategy classes, you get access to everything. Okay. Here's ultimate income, what? Tracking unusual options activity, gamma irons. Gamma irons is critical. All right, volatility crash course, back spreads, controlling your risk. It's all here. Okay, fruit fly, consistent, small account growth formula. We have all the classes in there. As I was saying, bonus number 7, mindset mastery. It's the 5 essential building blocks to successful trading. That's actually Steve Miller's class. As I said, you could pay $1,000 for that class alone. Be worth it all day long. Okay, bonus number 8, it's a quick start guide to Ultimate Trades. Ultimate Trades. It's a 5-hour class. People want a quick start guide just to reference. This is it. We built literally a Cliff Notes version, okay, of Ultimate Trades. Listen, what our members are saying. This comes from Jeremiah a little bit more recently. My first 4 trades following exactly the details in your Ultimate class just closed out using GTC orders set right after getting into the trade. It's paid for your class in less than a week. I'm very thankful I subscribe to your services. Keep up the good work. Thanks, from Jeremiah. Okay. TheoTrade includes everything you're going to need to invest in trade. We do classes, we do coaching, email access to the instructors, live trading chat room, indicators and scans, mobile access 24/7. This it's just everything you're going to need to succeed. As I said, we kind of call TheoTrade the Netflix for traders, because every genre, everything you can imagine. By the way, we're all searchable. You can actually go through there and search in context of any trading strategy that you can come up with. It's $297 for 3 months. That's total Theo. It's $297 for 3 months. Okay. And I want to clarify a couple of things before I go any further, because everybody's like, give me the price. Okay. It's $297 for 3 months. First and foremost, this $297, this is not a membership. We don't do that here. So it's $297. And this is also not an introductory. 3 people already asked that same question in here. I just want to stress to you, it's $297 for 3 months. It's not a membership. So after 3 months, you say, I want to do it again. It's $297 for 3 months. You go, I want to do it again. It's $297 for 3 months. Okay. This is not an introductory price. And again, we don't do memberships. It's a one-time charge. Okay. Ultimate Income Generator course is available immediately. Again, we give you access to over 100 classes. There's new monthly classes. In fact, we have a new class coming up very soon. We have a live trading chat room. We provide real-time trade ideas. Okay, market insights and analysis. We broadcast 6 hours a day. We have 59 proprietary indicators and scans. We give you text, text and push notification on 5 separate portfolios. You just saw the Theo Theta portfolio. There's daily coaching sessions. One of them, which is done by Professor Jeff Bierman, timely topics in stocks, options, and futures, and our instructors directly answer your trading questions via email. I'll tell you right now, just the last bullet point over here, if we could answer one question, it'll cover you for more than $300 easily. Okay, you go now to theotrade.com/SKU to enroll for it. Again, people constantly ask that same question. What happens after 3 months? Nothing happens after 3 months. Listen, if you want to do it again, we want people here that want to be here. And I just let everybody know that. Okay. So I'll throw this up here again. TheoTrade's a completely riskless trade. It's a 90-day money back guarantee. So if you're not satisfied anytime in the next 90 days, you don't have to go the full 90 days, whatever. Just support at theotrade.com. Hit us at support at theotrade.com. You don't have to give us a rhyme nor a reason. We don't want to hear a sob story. We get it. Listen, okay. You love us, let us know it. Okay. If you don't like us, get your money back. We understand. There's no excuses, no questions, no commentary needed. Some people feel that you want to add commentary. That's fine. Just email us, ask for your money back if you're not happy. If you receive a full refund, you get to keep the first bonus, which is the introductory classes. You get to keep that bonus on us if you receive a refund. Get into TheoTrade now. We're going to work with you directly. By the way, we do 50 spots, okay? And there's a lot of people on today. We do 50 spots on the TheoTrade riskless deal. And we do that specifically because of the, well, really it's the unlimited email mentoring. So some people may not email us that much and others may email us, 4 or 5 times a week, which is fine, okay? But we limit the money back guarantee to the first 50 people that enroll for it. Obviously, it's to incentivize you, but in reality, there's only so many people we take on board. We have over 6,000 clients currently on TheoTrade. Nobody is quote unquote a member. They just renew when you want to renew, okay? In addition to this, not only is there email mentoring, you can send us your trades. We'll go through and reconcile some of your trades. Listen, the $297 riskless offer, it's never been available before we have no stipulations on it, okay? It includes the Ultimate Income Generator class, all the bonuses, the Theo Theta live portfolio. And again, there's no stipulations to the money back guarantee. Anything happens in the next 90 days, as long as you're in the first 50, you're fine, you get your money back, okay? Here, let me pull this up. It's theotrade.com/SKU, okay? If you go to this site now, you can enroll for it. I'll take you there here in just a second. In fact, here, there's somebody actually asking for me to pop this site up here really quick. So I'll do just that. When you go to this, and again, this is theotrade.com/SKU, okay? When you go over here, all you have to do is click the add to cart, all right? By the way, on the 50 riskless spots, I will be more than happy. I can read your name off if that's a problem, okay? I can read your name off and let you know that you've enrolled and you have one of the 50 spots. I'll read some of the names off here. It takes me about 4 or 5 minutes to be able to see that. By the way, I'm also going to answer all your questions, but click add to cart. You click add to cart. I just want to go through one aspect of this, okay? Obviously name, email address, the phone number. If you want to enroll for text messaging, we don't send you a million different texts, okay? You might get as much as 3 text messages in a week. In a really busy week, you could get 4 or 5, okay? But the text messaging, to enroll, okay, for the text messaging, we use the phone number off of this enrollment form. So I suggest that, obviously people put it down there. The other aspect I always want to resonate in here, this is a single payment of $297. You can also break it up if you want, but I want you to understand it's not a membership. And I always reiterate that because people don't like things like gym memberships. I get it. How do you get out of a gym membership? You don't, okay? We don't do that here because we don't like it and we believe that people don't like it either. So it's $297 single payment or break it up. That's, by the way, that's completely up to you. I just wanted to throw that up there so you guys saw it. So again, it's theotrade.com/SKU. Let me hop back over here. Oh, what are members saying? This is actually somebody who came in on March 30th. My closed year-to-date profit from Ultimate Trades has paid for my yearly TheoTrade subscription. Nice, thank you, from John, okay? This is everything that you get today. It's $297. It's the Ultimate Income Generator course, the Quick Start Guide, all right? 100 classes, the VIP membership, that's access to the chat room, which I'm gonna show you here, okay? This is the Theo Theta live portfolio. Obviously, bonus 5 is the technical analysis toolkit. Bonus 6 is the day trading treasure chest. Bonus 7 is the mindset mastery, which I put huge weight. I'm telling you right now, you're going to spend $300 to do this. Okay, watch a couple of these courses. You're going to be blown away. Okay, no one in the industry can do this. I don't care if you paid $20,000 elsewhere. Nothing is going to come close to the archives that we have here in TheoTrade. And please, check out what we do here, okay? Send us emails. I'd love feedback. Send us emails to that effect. Again, it's just support@theotrade.com. Send us emails after watching a couple classes and, hey, agree or disagree, but you guys are going to get a good feel for what we have. But some of these classes, they're incredible. And again, of course, the quick start guide to the to Ultimate Trades, okay? If you go right now to theotrade.com/SKU, you can follow me to this link for the auto expected move indicator. The auto expected move indicator is actually found towards the bottom of theotrade.com/SKU. if you were enrolling today, you need not download this. We have it on our website. You're not going to miss anything. Okay. A few aspects I just wanted to show you around TheoTrade. This is TheoTrade. Let me refresh really quick. So this is TheoTrade. Okay. And what you're currently looking at is Corey Rosenblum, and he's live.
Actually, well,
Okay.
let me see if I can sneak
So
this
you
in.
can hear him kind of in the background. I have my sound turned on.
Look at this. I just want to sneak in this comment about the Russell being weak.
All right. So Corey Rosenblum is actually live, talking about generalized marketplace at this point in time, but do a couple trades throughout the course of the session. So that's the chat room. Obviously, the start here menu, okay, is getting you started, in the marketplace. This is the Ultima Theo Theta portfolio. Okay. Here's all the different option strategy classes we have. Okay. And obviously, here's theotrade.com/skew. Now I'm going to answer some generalized questions here for everybody and make sure that everybody is on the same page with this. Just hang with me here for a moment. All right. Oh, well, our members are saying, you know what? I wanted to throw a couple of these out here really quick because this one's actually from November 10th, and there's a reason I brought this up. It's from Jeff, and I blocked out his last name. I wanted to drop you a quick email. I think the class is wonderful. Okay, I've been stretched each session, not beyond my capability. After each session, I watch the recording, do the homework. Okay, I feel each week that my knowledge of options trading is growing steadily and rapidly. Obviously, can't speak for my classmates, but it's going well for me. Thanks for the great instruction, from Jeff. This one comes from Todd Summerall. And the reason I threw this one in here, and by the way, Todd said we could use all of his information. The reason I threw this in here is I want you guys to know that you can bounce real email questions off of us. And by the way, I've got your questions on my iPad here right now, but I'm actually bringing those up as we speak. This one says, don't know if you remember me. Okay, but I emailed you a few weeks ago and told you my delta was positive 1,000 or couple or more. You told me to smash it or I was going to be in trouble. Okay, it says I smashed it. You saved my account. I just want to thank you. Before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay, you can use this if you want, and I did. The reason I threw this up here is I want you guys to know that you can ask us real trading questions. You don't have to go in here and say, I hypothetically thought that I should have and could have and didn't. Like, we don't want to hear hypotheticals. But listen, if you got questions, fire them at us. Here's some general Q&A, and then I'm going to get to really finite and specific Q&A, if that's okay with everybody. And again, all you have to do right now, somebody popped in here again, you just literally go to this site, click add to cart. It's TheoTrade. Again, .com/skew. As I said, if you're in the first 50 people to enroll, and there's a batch of names coming through right now, so I'll read off all the names of those that have enrolled, okay? And again, I'm just bringing that up on my screen. Everyone that's enrolled in that first 50, I will gladly read off just your first name, okay? And that's fine. It'll obviously suffice to say. So you hit the site. All right. Let me come back here and answer some questions, some generalized questions. Again, I put the web address up here, theotrade.com/skew. People always ask me, what do I need to get started? Okay. And you need a laptop, internet connection. I'll be really frank with you. I will literally sit here in front of 6 computer screens and I will still trade off of lovely little iPad. I love it. I like the iPad. I like the Android. I've actually got an Android tablet over here too. Probably out of the camera range, but I'm crazy and always have like a backup, like laptop just in case. Okay. I have a lot of tech gear over here. Why? Because I'm a tech geek. It's good. I grew up in the tech geek world. So it's good. I like actually trading off the iPad. I'll tell you right now, you need an internet connection and a tablet. That's it. We'll give you everything else. And I always reiterate this to people. Like, if there's something in this business, and I really mean this, something in this business that you need that you're not getting here in this business, let us know. Like, seriously, let us know. That's what we built this entire firm for the express reason. We saw all the holes out there and all these people trying to make money from education in here. Okay, that's not us. We're $297, and I'm telling you, no one can match what we do here at TheoTrade at any price. I don't care. Again, you can spend $20,000 on other education. It's going to pale in comparison to what you get here at TheoTrade, and you're going to see that. By the way, I'm going to read off a couple of names here in just a moment, but of the first 50 people, listen, this is not a membership. You're not going to auto renew. We're not going to auto bill you again. You pay as you go. That's just how we are. Come as you are, pay as you go. And I hope you guys appreciate that as well, because I don't, again, I don't like memberships. I never did. So to the point of, when I say I don't like memberships, okay, we built a gym in this house in Scottsdale because I'm crazy and I don't like memberships. And I wish I was joking about that, but when COVID broke out, we built an actual gym in the house over here. In fact, I may even have a picture of it. If you guys want to see a gym, oh, I do. Huh. I literally, this is my Skype. So, okay, forgive me. I'm just going to pull it up really quick, but it's one of my favorites. Okay. One of my favorite things to show people. Oh man, come on. I can't even pull it up over here. Anyway, I just wanted to show it. Okay. It's my baby. So if you're looking for a house right now, this house is going to go on the market. We moved to St. Croix shortly after COVID hit, but I built the gym and now I'm going to leave it. It's my baby. Okay. This is how much I hate gym memberships, and I'm not joking. By the way, if you look very carefully, all the equipment says Snap Fitness because when COVID hit, it shut down a lot of gyms. So I walked into a gym that said closing and I said, I'll take it. Okay. And it was like pennies on the dollar. It was a good trade. It was a good trade. I put a lot of weight into that one. I know I'm crazy about the non-memberships to the point of literally putting gym equipment in the house. So it's not a membership. We're not going to auto renew or bill you again. We're now providing Theo Theta weekly update videos so you can follow all the moves that we make. Speaking of which, I'm going to read off a couple of names here. I'll start with Byron W. from California, Donald M. from Canada, Oliver F. from Thailand, Alice M. from Massachusetts, Henning B. from Germany, Mary N. from California, Graham J. from Canada, Vera A. from New Jersey, Leopold S. from Florida, John T. from Illinois, JM. So it's JMK from Wisconsin, Robert R. from California, Dale A. from Florida, William H. from Texas, Alex S. from California, Robert P. from Pennsylvania, Edward F. from Georgia, Richard M. from Illinois, David F. from Nevada. By the way, this is kind of far away. It's like doing an eye test almost over here. It takes me about 5 minutes. I'm sure many more of you have enrolled. It takes me about 5 minutes before I see it up here. So I'm going to get to some of your questions though. So TheoTrade archives everything. We understand that you can't watch everything live. Okay, so we archive every spoken word here at TheoTrade. We're also going to provide you to TheoTrade mobile. So we have our own mobile application. And by the way, if you're kind of curious, you can absolutely go and download, of course, TheoTrade mobile from any of the app stores or Google's obviously Play Store. So our mobile device, it's kind of nice because it has this, you can actually speed up and listen to everything at like 1.5 or 2 times the speed. I talk really fast as it is though. Number 6, add your cell phone number and you're going to receive text messages. So when you're enrolling, if you add your cell phone number, you receive text messages, and you can do TheoTrade mobile for push notifications. So you can email us anytime and receive a response within 24 hours. There's one caveat on here that I always throw out there. Okay, listen, here's the caveat on emailing us. Do not email me with 5 minutes to go on an expiration Friday. Okay, I am a trader. I am more than happy to answer your email questions, but I'm a trader. So typically, if markets are rocking, it's a Friday afternoon, we're trading, and give us a little bit of time to be able to answer the emails, but we will get through every email in 24 hours, okay? Number 9, you're gonna gain access to every course TheoTrade has done in the previous 5 years, including classes, coaching sessions, everything we've done, it's all searchable, the archive is there. Number 10, variations of the trades that we showed today are available inside of retirement accounts, as little as $2,000 in the account. So we at TheoTrade can also help you get approved for options at several major brokerage firms. The brokerage portion of it, some people were like, I'm in Canada, what do I do? I'm here, I'm there. Okay, listen, I get it. We actually have brokerage firms that we prefer for Canadians. Here in the US, we definitely have preferred brokers. If you have a smaller account and you want to be able to sell options like we're doing at Ultimate Trades, there's some specific brokerage firms that we like to use that give you the flexibility and variability to trade anything you want whenever you want. Remember, there are 50 riskless spots available. By the way, there's a bunch more names that are piling through right now, and I'll read those off again in a few minutes. But I want to answer some more questions first. So listen, there's no risk to you. So enroll and take action. That's theotrade.com/skew. Let me get to some of the specific questions over here. These are some great emails, but just to for the sake of time over here, let me just actually throw up the page and answer. When I say specific questions, okay, I mean questions that you asked that I did not answer while I was actually live over here. So theotrade.com/skew. By the way, we're here to answer questions. We're also answering questions inside of the chat. So let me get to a few of these. Again, the web address right here, theotrade.com/skew. Okay, whoops. I deleted my own /. Okay. Oh, swing and a miss. There we go. Here we are. Okay. Some of the questions. All right. First and foremost in here, and again, I'm scrolling back a little bit and going to answer some of these. Okay. Charles had asked, what about like during March 2020? When bid-ask spread was as wide as a truck. Okay, so Charles actually kicked off with kind of a fun question. The markets in March of 2020, crashing down. Those things were crashing. As long as you had, and we did, Charles, a risk twist spread on or a VIX volatility spread, you're okay. Okay, I'm not going to deny the fact that when you woke up a little bit, let's just say, eyebrows got big. That was a substantial move to say the least. We've only had approximately 4 of those magnitude moves in literally like the last 2 decades. Nevertheless, because I don't expect a repeat of March of 2020. Okay, we were fine throughout of it. One of the things though that Charles brought up is he said the bid offer spreads in the markets, especially even spiders. Markets were like $1 at $1.30. They were like untradeable. That's actually okay. It's one of the reasons that we have a risk mitigation tactic in place, at all times, meaning that the VIX volatility spread is on. So the markets can have time to calm down, to contract a little bit, and then you can execute out of it if you need it. I will say this though, March of 2020 provided some incredible premium selling opportunities. I mean, like once in a lifetime kind of stuff. It was just a little hairy at that point because you never know in the heat of battle if we're going to continue to crash or we're going to rally out of it. You just didn't know. Okay, you didn't know, and that's the bottom line is you don't know. Another question came in. I'm new to options. How can I get caught up to speed so I know what you're talking about? Sounds like a foreign language. I actually like that. The start here menu. In fact, here I'll show it to you. Okay, the start here menu. This is designed for exactly that. This is, it's not like a new language. There's probably 20, maybe 25 terms and definitions that you have to kind of get down. From there, it's gravy. Like seriously, it's like 20, maybe 25 terms and definitions. You'll hear phrases though, like "I got my face ripped off," or "hit the bid," and stuff like that. You just pick up along the way. There is definitely a there's trader geek lingo for sure. And I always have a fun time. People like, how did you learn all that stuff? And I'm like, I grew up around it. I mean, I literally remember like dinner table talk. Like you're like, oh man, I was like so deep in the money in there, and I'm like, oh yeah, money. Like maybe like, oh yeah, I was getting killed in that volatility. It was just crazy, and I'm like, oh yeah, volatility. I had no idea what the hell was going on. But if you grow up around it, like you literally, it's like second nature. So I went to Chicago 3 weeks out of college. In literally, I was like eating ramen noodles in a dorm, and 3 weeks later, I was standing on the floor of the Chicago Board Options Exchange runner. I wasn't a trader. It was only a couple of weeks after that, though. We had a trader. By the way, this is a great story. So we had a trader that showed up, and let's just say he was, not sober, and he showed up that way, and he showed up about 9 o'clock in the morning. If you guys know anything about traders, okay, if you show up late, right, you better have a really good excuse. And he missed the bell. So that excuse better be like, grave death excuse. He showed up late. By the time he got there, they already had a jacket for me. That was it. They basically said he wasn't there. You had to, you don't make the bell, you're done. So he showed up, kind of half cocked and was gone. And I remember thinking, I'm like, oh man, that's like, I like the guy, like felt horrible right up until the point they put the jacket on me and they're like, here's your spot. I only spent a couple months there. They moved me upstairs. I'm 5'8", like 180 pounds, like on a good day. I didn't really love the trading floor. By the way, there's more names that just came in. I'll read them off in a second. There's some great stories though. Stories from the floor. Save better for another day. That's when I met though some of the guys that started Thinkorswim. You know what? I like this one. Will Ultima help me being a more consistent trader? The answer, absolutely. Now, every one of our classes though here at TheoTrade is methodical to obviously produce better results and a better trader. So I stress that to you that, Ultima trades, yeah, once you see the criteria laid out, okay, just following through the methodology is going to make you better at everything you do in this business. So I take that one to heart, absolutely. By the way, I like this. I usually close winners too soon and let losers run. Yeah, that's going to be fairly easy because in this, you'll appreciate this one. In all the courses, we actually define what the profit and loss should be. We don't leave that to chance. And a lot of the stuff, if you tell me, like literally, if you tell me I close winners too soon and let the losers run, if you tell me that, I'm going to tell you right now, you shoot me an email, I'm going to show you what course to go to first. Don't even watch the Ultimate Trades. Okay. I'm going to give you another course first that will beat you up on consistency if that's the problem. Okay. I like that stuff too. I don't mind if somebody comes in here and says like, hey man, this is what I need. So, oh, by the way, another batch of names I'm going to read off real quick, and then I'll go back to a few more questions. Walt W. from Illinois, Ken W. from Arkansas, John C. from Colorado, David C. from New York, Terry H. from Oklahoma, Heidi W. from Colorado, Carl L. from Washington, Francisco J. from Madrid, Jim R. from Indiana, Michael M. from Georgia, Roy M. from Texas, Clane V. from Canada, William A. from Oklahoma, Alan M. from Arkansas, Ram K. from Canada, Lonnie M. from Iowa, Keith W. from Texas. All right, that's the next batch of names that just read through. Hold on, I want to bring that window back up because it's got my questions on it. Here, somebody said on a $1 to $2 million account, it's a good problem to have. My question is, what's the best scalable system? Okay, return on investment, simplest. I'm going to just make this clear. At a $1 to $2 million account, you're trading Ultima strategies. And you will definitely want to apply for what's called portfolio margin. We can walk you through all of that. There's just no if and or but about it. If you want to actually get to scale and you want to start to hit the accelerator in terms of returns on a bigger account. So I work with most of the larger accounts specifically in here. And that's what we do as Ultimate Trades. Okay. All right. So another one came in here. I'm scared of losing money like I did in prior crashes. You know what? Crashes are part of the business. Okay. Losing money doesn't have to be. Crashes are part of the business. I mean, one of the things that you'll see inside of my portfolio. Okay. I'll pop it up here again. All right. There's a bunch of symbols in here that are literally hedges, VIX being one of them. Okay. And the reason that VIX is sitting out here, it's only 4 contracts in this one. The reason the VIX is sitting out here, okay, that's my risk mitigation tactic. That is, listen, crashes are going to happen, but we're not in here, okay, on this particular strategy. We're not in here to buy stock. I'm not going to go down with the ship, some 20%. If you're selling out of the money option and we start to crash, okay, that VIX spread is going to swoop in, okay, and reduce risk. Listen, you have to sell premium, okay, to produce returns. But in doing so, you inherently take on risk. The risk that you take on, you don't have to mitigate all the risk, just some of it. You just have to shave off layers of risk. So when the market does eventually crash, and it will, and we all know it will, okay? This could be the bubble of all bubbles, the bubbles of all bubbles. And when it does come off, okay, you're going to be prepared for it. And it's going to be much more systematic to the point where you're like, whew, it's a good thing I had that VIX spread, and you're going to exit. That's what I was talking about with March of 2020. I think that's fair game. Oh, I like this one. Millie actually asked, can you explain why there's larger theta decay out of the money? Okay, so there was a big change of volatility. big change in volatility that we started noticing after COVID hit. And not only hasn't it gone away, but it's actually proliferated itself even more. Options further out in time don't decay as much, but way out of the money options far out in time have actually greater decay rates of shorter term options. But also those way out of the money, far out of the money future options, they also take very nominal amounts of gamma risk. And you actually even mentioned gamma in there. The gamma risk is going to be negligible out of the money. It's actually one of the primary reasons we want to sell them. That's what Ultimate Trade really means. Okay, we're at a portion of the skew that doesn't have the gamma risk in there. So it's the volatility, though, that's impacting us and impacting us quite positively to be able to sell premium. Okay. Somebody said, can I use this with a traditional IRA account? Yes and no. Okay. So yes, you can do this in a traditional IRA. In a traditional IRA, okay. However, you may not necessarily want to be at TD Ameritrade. All right, listen, I've worked there for forever, right? So I get it, but they might not be the most friendly for IRAs and what you can actually trade in the IRA. With that, I hope I got all the questions. A few more actually popping in over here, a few more names. By the way, let me read off the last batch of names. There's only a handful of those original 50 spots left. Derek N. from Qatar, Leonard R. from Oklahoma, George F. from Virginia, Robert S. from Texas, Bob H. from Michigan, John B. from Florida, Paul S. from California, Samuel D. from California, Predrag K. from Illinois, Roger K. from Georgia. Listen, I've gone way over on time. By the way, somebody was saying, what is Total Theo? It's everything. It's everything that we do. That's basically what we call Total Theo. It's the entire package. So when you enroll for Total Theo, there's no buy this class, buy this. We don't do that anymore. Okay, it's $300 for 3 months. If you want to do it again after that, it's $300 for 3 months. I hope you guys do appreciate that. Go to theotrade.com/skew. If you have any questions after today, by all means, please email us. That's what we're here for. To answer those questions. I'll be live in chat first thing in the morning. Other than that, I want to thank you guys very much for tuning in today to the Ultimate Premium Selling Strategy. Thanks, everybody, and have a wonderful afternoon. Bye-bye.